All right, let's get a microphone up. Good morning, guys. How's everyone doing? Oh, man. Ron, I really like the trade, and it works well with some other stuff that I'm doing. I'm trying to piece it all together to fit my plan. Um, love momentum. Good morning, JW. Nice to see you. Guys, I don't know what our numbers are going to look like today. I don't know how many people are going to be in here or even what the market's going to look like. No way. I work from home, Ron. I trade in my underwear. Robes are for suckers. Not really. Just kidding, everybody. Sorry, that was live, huh? Good morning, Sydney. Um, guys, I want to throw this out there, and I want to be very, very clear about it. I want you guys vocal today. I want you guys asking questions. Dictate what the lessons are going to be. There is a good chance that the market may not be super busy. The closer we get to Christmas, historically, the slower things get. Definitely not guaranteed. We've seen a lot of action already in the market. Hopefully, it keeps up. Hopefully, it just keeps going, gives those great patterns. Um, but guys, drive the lessons today, especially you guys that are pretty new. So, Lyle, today's your day, man. Good morning. Anything and everything. I know you've taken the last few days to kind of soak it in and get an idea. Start throwing stuff out there, whatever you need. Don Sanchez. That's a relatively new name, I believe. I'm not sure. Maybe it's a blast from the past. Same thing, though. Guys, really be vocal today. Drive what we're doing. Andy Halls, tell me what we're going to talk about today. Albert, that is a crazy picture. I like it. Um, and is it Diver Prescription? Diverx. I know it's Scott. I'm just going to go with Scott. That's easier to say. Good morning, Safia. Welcome to the classrooms. Great to have you. Guys, what we do in this classroom is the same essentially every day. It really is. And I think that that's one of the reasons that it's so effective is we're getting that recognition through repetition. Um, we are going to go through routines. We're going to talk about patterns. Yeah, it was kind of kooky, wasn't it, Gary? Um, and I'm going to give you everything that you need to be able to use the software successfully. I'm going to give you everything that you need to be able to take what we do and turn it into a plan for yourself. I'm a huge fan of routines, and my first routine every day is I go to forexfactory.com and I look at their calendar and I just want to make sure that there's nothing going on that's going to make the market jump, bump, spin, do whatever. The people that move the market are watching news, and a lot of times they react to the news, and I don't want to be in the middle of their reaction. Today is Thursday, December 21st. Can you guys believe it? No problem, Andy. Have a good one, man. When you get back, if you have questions, just holler. Guys, we are 4 days away from Christmas, if that's what you celebrate. And at 8:30 a.m., we had high impact and we had medium impact news. And if you were watching the NASDAQ or the S&P, it really had a pretty quick movement. It was too quick for me to trade. I don't know. You may have spidey senses and be able to trade something that fast. For me, it typically is better just to stay out of the way and let those guys react. But I check this every morning. I'm looking for red boxes and orange boxes. At 10 a.m., 10:30 a.m., um, we've got some low impact, which means I'm not really expecting it to do much. And then tomorrow we've got some pretty good news releases. So every morning I'm checking it out. Every morning I don't trade the news. Like, it doesn't matter to me what they say. Doesn't matter to me whether the market goes up or down. I got patterns to make money both ways. I just don't want to be in the middle of an emotional response. And then everything that I talk about, everything that you guys need. Lyle, it's always easier to ask your questions in picture form, but let's play the guessing game. The vertical and horizontal lines on the small S&P. These, just so that I'm clear, right here, if you want to give me a Y or an N, and then if it's an N, I'll keep pointing until we get there. I'm assuming that's what you're talking about. Has like a little step on it. Boom, 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 boom. Goes from vertical to horizontal. Is that the right one, Lyle? And here it's green. Same look, but it's green. Okay. Yeah, if you'll show me what you're looking at, take a picture of your chart and pop it in, and then I'll just describe everything that I see on your chart, and then we'll be good. Um, where was I? I don't know. Here we go. Tutorial page, guys. This is where all the answers are. Everything that you need to be successful is really laid out as simple as I know how to make it. Just because I tell you that I'm going to give you everything that you need to be successful doesn't mean that that's all that there is, right? There is, I'm helping you build a foundation. We're laying about 50 feet of concrete for you to build your day trading skyscraper on. Giving you the basics, staying focused on the best, but most importantly, guys, we're just going to learn how to read some indicators this morning. So I'm going to click on the tutorial section. And guys, reading your indicators is really the most important. Hey, good morning, Joel. Is really about the most important thing that you can do, guys, because chart reading is 90% of our day. Chart reading is really what we're doing. And then we only become day traders when rules are met, when our chart reading tells us that we have the advantages that we need to take a trade. In your chart reading, everything that we focus on in the first hour is designed to get you to this chart reading point. You're going to understand some pretty cool concepts. You're going to be able to recognize where the market is likely to continue. And you'll be able to use that continuation point for what we call a high probability trend trade. And this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. Excuse me while I stumble over my tongue. But most importantly, guys, is this high probability trend trade that we're going to talk about is laying down that foundation. It's teaching you to read your indicators. You're going to understand where the market is likely to continue. That becomes your entry. Where the market is likely to go is going to allow you to take profits. And where the market is likely to stop, and if you were in my class yesterday, you saw this. Where the market is likely to stop can shut down a trend instantly, guys. These likely to stop areas will create reversals in the market. The likely to stop areas will create untradeable bounces when buyers and sellers fight, because these termination conditions, as we call them, are where decisions are made. The people that move the market enter positions at these key Fibonacci areas. People that move the market exit positions at these key Fibonacci areas. Your chart reading is going to have you knowing exactly where they are. And I'm going to give you a very simple set of rules to understand whether they are likely to hold or have the potential to break. And you're going to let your chart reading dictate everything that you do. And it's kind of cool that we can do that. We're going to do it with a high probability trend trade. That's how you guys are going to learn to be chart readers. And a high probability trend trade is a trade that only has 3 rules. There it is. Again, simplicity is such a big part of finding success early. Not overthinking it, guys. You've got the rest of your life to make stuff up and be aggressive and all that craziness. So let it be easy in the beginning. Good morning, Dwight. A trade is really nothing more than momentum, a clear path, and an entry area. And this is the way it's taught with a high probability trend trade. And each rule of the trade is designed to give you one of those advantages. The advantages are in yellow. So rule number 1 will provide you momentum, a market that's likely to continue in the direction that it's already going. Rule number 2 is going to give you a clear path, meaning that none of those likely to stop areas are in between you and your target. And then rule number 3 is going to get you into the market at the absolute best of the best spot, that point where the market is most likely to continue. So each rule is designed to facilitate your growth as a chart reader. And then it's only going to happen on 2 charts. Nobody wants to read War and Peace as their first book, right? We're going to keep it simple. Puppy goes to the market or something. And only 2 charts is more than enough information for you to find success. We use a large chart initially. And a large chart is going to define direction. It's going to let you know which way you should be trading. The large chart is going to define momentum, that first advantage that's provided by rule number 1. And it's going to define all the areas that those people that move the market may be reacting to. And it's going to give you that clear path from rule number 2. When these two rules are met on that large chart, you're going to go to a smaller, faster chart. What happens in the most current bar on the large chart will be broken down into 15 to 30 bars on a smaller, faster chart. And this is where your refinement process of that broad stroke that the large chart is pinpoints where the market is likely to continue. And this becomes your entry for the highest probability trend trade. And it's going to allow you to reduce your risk. It's going to allow you to increase your profit potential. And it's that likely to continue area, which is rule number 3 for entry. So every day in the classroom, so Lyle, you've been here 3 or 4 days. You know this to be true. I talk about this every day. Diver, I talk about this every day for the first hour. CJ, Mike, this is what we do in the first hour. We talk about 3 rules on 2 charts, giving advantages and helping you become a chart reader, helping you get intimately knowledgeable with what your indicators are telling you. And then I always share your path to success, guys. The fastest way to getting where you want to be as a confident trader, as a great chart reader, it begins with posting in the room. It begins with posting pictures in the room. Everything you do, everything you see that you have a question, drop it in the room. And what you're doing is you're opening yourself up to a private session. You're literally saying, hey, Mark, this is what I did. And this is why I did it. And this is what I was looking for. And I just want to make sure that I'm reading my chart correctly. And we'll go through this one when we start looking at charts. And we'll talk about your charts, and we'll go back to the advantages that were present, the advantages that may have been missing. And we'll talk about why you did what you did. I need you to tell me why you did what you did. We're going to talk about your entries. Maybe it was perfect. Maybe there's a way we could refine it to reduce your risk, to maximize your profit potential. And then we'll talk about your exits. Why did you exit here? Was it a predetermined number, which is always okay? Or did you get scared? Did you get fearful? Did you forget that the large chart leads the way? And this conversation, guys, is going to help you get to where you want to be, because in the beginning, you want to make sure that you're following the rules. And you're just not going to know if you are unless you're asking. Don, good. I'm glad you like it. And that's exactly right, isn't it? Don, write this down, brother. Large chart leads the way. Large chart leads the way, because the large chart gives you everything that you need. The small chart's just looking for the entry. The large chart is what the large crowd wants, the people that move the market. The large crowd defines the direction. When these guys start pushing it up, that market's going up, absolutely. When these guys don't have any key areas to react to, you've got a clear path. When these guys create that momentum, that market is just railing like a semi, full loaded, going down the highway. And then you get the small chart, the small crowd. These guys are like, hey, everything says up, let's push it down. And they can usually get a little shove on it, right? It's like jumping in an elevator. The elevator's going up, but if all 4 of you jump at the same time, you push it down about 2 inches and you giggle and you're like, oh, it's great to be 12. That's kind of what the small chart is, guys. It gives you that little push to the point where the market is most likely to continue. And if you just get in the habit of posting everything that you see, hey, Mark, I have a question about my chart. Here's the picture. Hey, Mark, I have a question about my entry. I have a question about my exit. Hey, Mark, I'm working on this new method, and here are my rules. Can we work through it together? The answer is always yes, guys. So post in the room. The person that posts the most gets to where they want to be. The next thing you can do is take advantage of that spreadsheet that Nexgen provided you. It's in the Nexgen Study Picks Plan License. That's a lot of words. You're going to find the Nexgen 90-day training worksheet. There's an open document. There's also Excel, depending on what you have going on. But this is kind of a trade journal. The first page of this spreadsheet, guys, every time you pull the trigger, and let me back up just a step. I want you pulling the trigger. I want you taking more trades than you should. Every time you think there's a trade, I want you to take it. And I want you to post it in the room, and I want you to say, Mark, look at this. I thought it was a long. How'd I do, right? And you'll get to the point to where you go from, hey, Mark, was this a trade, to, hey, Mark, look at my rules being met. And that's kind of what this first tab of the spreadsheet does for you, is it gives you a journal spot. It gives you a place to put every trade that you take, and you can talk about how you felt and the advantages that were present. And then the notes section, the feedback that you get from me in your private session when you post that picture. Hey, Mike, you did awesome on the entry here. I love everything about it. The advantages were present, but I want you to notice how you exited long before you really had to, or maybe you held on to that trade longer than you needed to. Put that feedback in the notes section. And then every morning, guys, go back and look at what you did yesterday. Every morning, take inventory of the trades that you did yesterday and ask yourself, what worked? Guys, if you go through this little process, it's going to help. What worked? What were the patterns that brought me success? What were the advantages that made my trades work? And then, of course, the opposite side of that is what didn't work, right? What was my challenge? Where did I go wrong? Where did I forfeit an advantage? And what this is going to do is you're going to begin to recognize the patterns that are bringing you success in the market. You're going to recognize the patterns that are hindering your forward progress. But most importantly, you're going to begin to recognize patterns in yourself. You're going to begin to recognize maybe there's one rule that you love to break for some reason. Rule number 2, that clear path, tends to be the one most people ignore. You're going to ask yourself what felt easy, what kept you relaxed. But every day, you can get one step better. Remember that you're brand new. Allow yourself to be brand new. Give yourself some grace. That's my wife's favorite phrase. Give yourself a little bit of grace. You're new at this. It might take a minute, right? But you're going to get a little better every day. You're going to accelerate the learning with that little bit of study over a cup of coffee while your charts are loading. Your spreadsheet also, here's mine, is going to have a section for your favorite looks. So as you begin to develop a plan, as you begin to recognize these high probability trend trades, you can put them in here. CJ posts a room and posts a chart in the room. And he's like, hey, Mark, check it out. And look at him. He's coming off of a termination condition, right? And he has momentum here, and he just kind of gets in, gets out, taking advantage of the idea that rule number 2 can stop and reverse the market. CJ, one of the most important things that you can do for me is tell me why, right? Tell me why you did what you did. What got you into that trade? And it's not so that I can judge you, because I actually love everything about this. But I want you to know why. I want you to be able to take this picture, and I want you to be able to annotate it. And it's not for any reason other than you want this to be repeatable. So use arrows, right? Use the call out and say, this is an amazing termination condition. And you know that termination conditions can reverse the market. You know that termination conditions create this advantage and can have you start looking the other way. And you can say the momentum was down, right? Annotate it. I had 2 divergences from a fib. The momentum was down. I let things clear a little bit, and I didn't get greedy. I just made some quick cash on the way down right up to that area. And if you get in the habit of writing the stuff on the chart from day 1, what it does is it turns this look, absolutely, CJ, it turns this look, if I go ahead and upload it to my screencast account, I can go to my spreadsheet, and that was a perfect segue. Thank you for that, CJ. I can go to my spreadsheet, and I can drop it into my favorite looks, right? I can put that link in there so that I can always come back and look at the picture, and I can say, CJ making money with this look, right? This becomes CJ's look. And now when CJ's like, okay, I remember this one. It was great. It was awesome. It was easy. Remind me what that looks like. And CJ, this is the beginning of your plan, brother. This is the beginning of you creating a repeatable look that provides a statistical advantage so that you can take it every day. I think I had too much coffee today. And then the next one is the client trades. And guys, these are where you're going to see that high probability trend trade a lot. This is where Nexgen users have presented in the room and said, hey, Mark, here's the rules. And I said something crazy like, man, that's perfect. That's everything that I hoped for. Look at the advantage of momentum, and look at the clear path, and look at your awesome entry. This is an amazing trade. And you can see that there's questions written on the chart. And is this technically a high probability trend trade? And the answer is absolutely it is. So I took it and I dropped it into my spreadsheet. And guys, you guys can study all these, and you'll start seeing the advantages while the market is still. And it makes it easier to catch those advantages when the market is moving. And just if you took 30 minutes and clicked on every one of these links, by the end of it, you'd be like, holy crap, momentum is real. Oh my gosh, areas inside of favorable large triggers really do stop the market. And you would have this huge amount of trust that would make it easier for you to take trades. So your two-part path, guys. Everything in the room, post it. I don't care. You can't post too much. And there's some people in here that'll back me on that. I have people that have probably put hundreds of pictures in the room, and some of them are out with amazing levels of success right now. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. The idea is that we start with this high probability trend trade so that you can read your charts. Once you read your charts, guys, you're going to create your plan. And I'm happy to help with it from start to finish. Simulate, guys. It's monopoly money. You can't go broke on simulator. You can't get rich on simulator, right? You can't buy a simulator Ferrari or a simulator mansion. You can't surround yourself with simulator groupies. It's just simulator. This is the place to break things, guys. This is the place. Same thing as pilots, right? Pilots crash planes all the time in simulator and nobody dies. Do the same thing. The idea is that we want you taking the correct rules. We want you having a long-term success rather than a short-term victory. And then we're going to simplify a lot today. We're going to talk about the high probability trend trade extensively. We're going to talk about the three advantages extensively. We are going to pair the words to the pictures so that you can really put them together when you're looking at your charts. And you're going to learn the looks so that they become easy. Guys, these are learning the looks so it becomes easy. The more pictures you take, the easier it's going to become, the slower the market's going to appear to move. I always tell new users, try to commit to at least 15 annotated pictures a day. 15 pictures describing the advantages every day, because by the end of the week, you've got 75 pictures. And by the end of your 30 days, you're like 300 pictures deep, guys. And I'm telling you, the more pictures that you have, the faster recognition happens. If you go to my library, I'm just under 7,700 in this library, and the library is about a year old. So I'm pushing almost 8,000 pictures in the last year. And I'll tell you what, I'm pretty good at reading charts. Good enough that I can teach you. So without further ado, no more hesitation, guys. Let's get to work. No more slacking, dagnabbit. 3 rules, right? 2 charts. Simplicity. If you see somebody post another chart, don't worry about them. They're at a different place than you. If you see somebody take a rule that isn't or a trade that isn't a high probability trend trade, don't worry about them. They're in a different place than you. We're going to focus on you. We're going to focus on your advantages. And they all start on the large chart, and the large chart must have strong triggers. And I'm about to give you guys the easiest lesson you're going to get today. You can only have strong triggers if you're trading with the direction of the market. If the background on your large chart is green, the market's going up. You should only be looking for rules to be met for high probability trend trades long. And it's not even that there isn't a long trade just because it's green. You're looking for your rules to be met for a high probability trend trade long. If it's red, it's down. You're only looking for rules to be met for a high probability trend trade short. And are you ready? New users, help me out. This is the S&P. Is it up or down? Are we looking for rules to be met for longs or for shorts? Is the market going up? Is the market going down? Don't be shy, guys. This is the easy one. This is the gimme. This is the name a day that ends in Y question. Nobody knows? That's crazy to me. I'm the worst teacher. Thank you, Mike. The market's going down. Let's look for shorts. Let's look for rules to be met for shorts. Background's red, right? Let's look for rules to be met for shorts. Background's red. Let's look for rules to be met for shorts. That's it. It's really that easy. And that's your first lesson, guys. Don't fight the trend. When you fight the trend, bad things happen. Fighting the trend is the fastest path to financial suicide. Once you've established whether you're looking to go up or down, all you have to do is look for strong triggers. And strong triggers means, I'm trying to click on a picture that's not really a link. Strong triggers means that in that uptrend, when the background is green, your triggers have to be the same color. Your small triggers and your large triggers should both be green. They should be wide. They should be angled in the direction of the trend. And guys, strong triggers start when the smalls break above and away from the large triggers, and strong triggers end when they come back and work their way inside. So you're going to look for your high probability trend trades from the point of separation until they work their way back inside. And what you're going to see on your large chart are these tails or these wicks. These are the pullbacks on your smaller, faster chart, guys. You're going to use these to study. I'm going to show you how to do it. But when you have strong triggers, the odds are favorable for the market to continue up. We're going to call it odds favorable momentum all day long. When the odds are favorable for the market to go up, it's the most favorable look to buy Fibonacci support on a smaller, faster chart. When the odds are favorable for the market to continue down with strong triggers, it's the most favorable look for selling Fibonacci resistance on the way down on that smaller, faster chart. Guys, this is rule number one. This is the advantage of momentum. Momentum does a couple things for you. The first thing it does is it just gives you a fighting chance for that market to keep going in the direction, because it's hard to slow down the best of the best momentum. It also will break areas. You'll see odds favorable momentum smash through key Fibonacci areas because, again, it's hard to stop a market with that much momentum. And this momentum look is also going to cover a couple mistakes. If you accidentally trade into an area, but there is so much stinking momentum, you may get that little second push, that little graceful exit thing happening for you. So momentum is a great way to start things out, guys. Momentum should be the one that I think as a new user, you should never break. You should always look for that momentum. And then the opposite of strong is weak. If separation between the small and large means strength, well, then the small working back inside of the large means weak. In weak triggers, anything can happen up or down. It's no longer odds favorable. It's anything can happen. You're going to see weak triggers preceding reversals in the market quite often. You're going to see weak triggers as you come into key areas that are more likely to hold. And weak triggers kind of take that advantage away and turn it into a bit of a crapshoot, guys. So being patient. Remember, 90% of your day is spent waiting for these advantages to come to play, and they're going to happen on and off all throughout the day. Odds favorable momentum may push you all the way down to those anything can happen triggers, and notice that there's a reversal. And from the reversal, you get odds favorable momentum, and I'll be darned, there's one of those tails. You guys are going to pinpoint where the bottom of that tail is most likely to form, and you're going to be able to ride that wave of momentum up to your profit targets. And then they weaken, and we reverse, and odds favorable, and there's a tail. And guys, this is cyclical, but you have to be patient. You have to wait in the in-between times until you have that momentum. And then just understanding the colors is going to keep you out of fights, guys. You will see transition periods in between Fibonacci areas. You will see transition periods when your small and large don't agree, when your background and your triggers don't agree. Guys, this is where buyers and sellers are fighting out for supremacy. You've got the two big kids on the block. Both of them have a sack of money and a set of brass knuckles, and they're just going to duke it out. Because you can't have odds favorable momentum with indecision in colors, with discrepancies in colors, that's a great visual cue for you guys to just kind of sit on your hands and do nothing. Let them fight it out. Grab some popcorn. Have a good time. Eventually, somebody's going to win, and they're going to provide you odds favorable momentum. So reminding yourself that when that advantage isn't present, it's okay to do nothing. It's all right to sit on your hands. There's no reason to get caught in fights that you got no dog in that fight, right? So if we go and we look at the NASDAQ, the trend is down. And we also have odds favorable momentum. Give me a Y if you see it, guys. And check this out. There's one of those scales where you guys are going to be able to pinpoint exactly where the market is most likely to continue. This is your look, ladies and gentlemen. That's not so hard, is it? The background is red. Smalls below the large. Everything is wide. And dag nabbit, look at that. There's another one of those tails. There's another one of those tails. And the market continues down. Did anyone notice These weak triggers preceded a reversal. Man, it's just like the training materials, guys. All you have to do is learn the patterns. They're small below the large. Large or wide, they're angled in the direction of the trend. Odds favorable momentum is that easy to recognize. And if we back up a little bit, weak triggers, there's a bounce. Weak triggers at a fib, well, there's a reversal. Excuse me. We're going to do this all day, guys. We're going to recognize these advantages each and every day. We're going to talk about them. We're going to make sure that you recognize them. But rule number one leads the way, guys. The large chart leads the way. It has already defined direction, and now it's defined momentum. Well, now we're going to let it define areas, guys. And the areas on the large chart that we're looking at, we're going to make sure that they're not behaving as termination conditions. We're going to make sure that we haven't reached an area that may stop the market, that may create a bounce, an area that may reverse the market. Remember that these are where decisions are being made, guys. These are where buyers buy and sellers sell. Profits are taken and trades are entered by the people with so much money that they have the capabilities of moving the market. You guys have the advantage. You know exactly where these areas are long before we ever get to them. And the areas that we're going to look for are red Fibonacci resistance and blue Fibonacci support. We're going to look for these yellow 1-to-1 dots. Remember, this is all on a large chart. And then we're also going to look for these divergence highs and divergence lows. And I want to define divergence real quick for you guys that may not be familiar. Divergence means nothing more than there was a loss of momentum. So if the market goes down and up, price and momentum don't align. There's a loss of momentum despite the push in price. You'll see the cyan line print off the pivot from a low right about the time the third bar prints. Which means that price creates this, momentum creates this. Same thing at the top. You'll see this pivot, and then right around the third bar, a magenta line may print from a high, letting you know that there was a loss of momentum. And these are all lines in the sand where decisions are going to be made, and it's a pretty simple recipe to determine whether or not you have a clear path. Termination conditions must be false. And we can go back to the tutorial materials. And I'm going to give you guys the simple recipe right now. If price, those dynamic Renko bars, if price reaches support, ask yourself where the triggers are. Hey, Rob Shrimplin, long time no see, man. If price reaches Fibonacci support and your trigger lines remain above, you've reached a termination condition. You've reached an area that may stop the market, that may create a bounce. The path is no longer clear. And guys, the recipe is that simple. Price reaches an area, where are my triggers? This is what not having a clear path looks like. Well, how do we get a clear path? When both your small triggers, not the price bars, but when both your small triggers and your large triggers get to the other side of an area that may hold, that may bounce, that may break, now the area is broken and now the path is clear. And I want you to see how this works out. Let me take a picture of a picture. Right here, price reached, and all of my triggers remained above, right? I don't know. Is it going to break? Is it going to hold? What's it going to do? I don't know. Let me pause for a second. Let me sit on my hands and do nothing. Let me make sure that I'm not guessing or hoping or wishing or wanting. And then my small triggers absolutely smash through the area, but my large triggers are still above. Guys, 50% of my triggers are through, 50% are not. This is a 50-50 look, and you're going to hear that phrase in class a lot. And what a 50-50 look means with all that momentum is that there is potential for the area to break. Remember, strong triggers break things. But it's not broken yet. It's not broken yet because both my small and my large triggers haven't broken through. So once again, if the conditions are right, I can look for an opportunity. I can look for one of those tails. If the conditions aren't right, well then I need to let both small and large triggers get below the area, and now the area is broken, look for rules to be met. So 3 options, guys. Price reaches the area, absolutely no triggers break, absolutely no trades. It might stop, may bounce, who knows? I don't know. Small smash through, large haven't made it yet. It has the potential to break. Let's make sure everything else is perfect. Smalls break through, large breakthrough. Support begins to behave as resistance. The path is clear. I have odds favorable momentum. There's one of those tails right at the point that used to be support. Now it's resistance. And I'm able to ride that wave with all that momentum all the way down to my termination condition, right to where the market is likely to go. So guys, we're going to keep it super simple. For the brand new user, for the day one, the week one, the man, I'm just coming to terms with it. Let's keep it super simple. If price reaches an area and none of the triggers are capable of breaking, sit on your hands and do nothing. Let's see what happens, right? Let's start learning to gauge reactions. If smalls and large break through the area, well, now the area is broken. I have a clear path. Let's look for odds favorable momentum. And let's look for an entry. Let's look for our best of the best. And guys, the recipe never changes. Termination conditions at a high always begin with price reaching the area and the simple question, where are my triggers? Terminations at a low always begin with price reaching the area first, and then the simple question, where are my triggers? Guys, there's pictures for both that I just put in the room. And let's go to the live market and see if it wants to play with us. Price reached Fibonacci support, even with odds favorable momentum. Not one trigger broke through, guys. There's absolutely nothing to do here. Remember when I said that you could see the fight between buyers and sellers? From support to resistance to support to resistance to support, right to that divergence high and resistance. Guys, what you're witnessing right now is this huge fight between buyers and sellers. You can recognize it through rule number 2, keeping you from hoping that these areas break, keeping you from trading into support or resistance that the trigger lines are telling you. It's just too soon. You can't do it. Just sit tight. It'll break eventually. They always do. Sometimes smalls break through, large don't break through. The area had the potential to break, but it never did. Price got it back above, and it didn't make it. That's the NASDAQ. And then even with odds favorable momentum, sometimes the market reverses, and we're about to talk about that. But before we do that, let's look at a couple more examples. And guys, give me a why in the room if you're with me. Price comes down and loses momentum. It creates this divergence low. This is not a termination, guys. This is just a loss of momentum. Remember your recipe. Write it down on a piece of paper. Price reaches the divergence low. Where are my triggers? They're all above. Therefore, I'm cool with doing nothing. I don't have to guess. I don't have to wish or hope or want or any of that stuff, right? It sure is, Don. Great question. And when this termination condition reverses the market, a termination condition that reverses the market is going to be called a good bottom or a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take, guys, the one that we're talking about right now. This is what we call a pivot stop out of a prior divergence line. Price creates the line, retests it, triggers remain above, keeping you guys safe, and off it goes the other direction, guys. There's your pivot stop out of a divergence low. These are strong. They're even stronger when they come together with Fibonacci resistance or support. So once again, this is the termination, right? Not going long into that resistance. All my triggers are below. It's just silly. It's financial suicide. And then like Don said, when this termination gives me the full reversal, sets me up with odds favorable momentum and a clear path, there's my tail. This strong top is the precursor to the highest probability trend trade that I can take, the one that we're talking about right now. This picture is also great, reminding you that you got to be patient, guys. Left to right, price moves up, hits Fibonacci support. All of my brilliant students say, well, my triggers are below. I'm not going long, even though those small triggers are peaking above the large. Great move, because the market pushes. The sellers, the people in charge, push it all the way down to Fibonacci support. And when it gets there, you guys are asking the same question. Well, where are my triggers? Oh my gosh, they are light years above this area of support. It's not even hinting that it might want to break. I'm not going to go short, even though I appear to have odds favorable momentum, even though I'm in a downtrend. And once again, it keeps you safe until the market comes up and hits those two forms of resistance, creates a pivot stop out, all your triggers remain below, and then the magic happens, guys. Then I have odds favorable momentum after a termination that created a full reversal. Now I have a clear path because I haven't reached Fibonacci support. All of you guys are getting short right at the top of that tail and riding that momentum either to the key area or beyond, because a termination that reverses the market is a strong top, and it's a precursor for the highest probability trend trade that you can take. And then one more down here, I want you guys to see it, and this is my favorite picture. I say that every day, and I think I like it the more times I do this. Guys, I'm a firm believer in odds favorable momentum. There is no doubt in my mind, odds favorable momentum will push a market, and man, it will break areas like it smashed through support right here. But if it reaches an area and the triggers remain above, guys, as much as I love odds favorable momentum as into that advantage that I am, I absolutely refuse to take that trade into those yellow 1-to-1s because it hit and the triggers hadn't broken yet, and I don't know what the reaction's going to be. And then it pushes back up and hits resistance, and all the triggers are below, and there's nothing to do. And rule number 1 isn't met because the colors don't match, and there's nothing to do, and there's resistance again, and there's nothing to do, and my colors don't match, and resistance, and my colors, and resistance, and my colors. And guys, there's just nothing to do right here. This is the fight between buyers and sellers. This is the 90% of chart reading that's going to set you up for the best of the best, because when this termination condition finally gets that reversal in, we get odds favorable momentum, all the trigger lines get above resistance, now it's a clear path. There's your tail, guys. There's where you guys are going to pinpoint right where the market is most likely to continue, and that's your 10%. All this nonsense, these are account killers, guys. You never had the advantage of momentum. You never had the advantage of a clear path. But if you sat on your hands until you did, you took that easy winner. All the way up to Fibonacci resistance with all that resistance, guys. 90% of your day, commit to it. There's not going to be a damn thing to do. You're just going to wait. You can start playing if then. If this momentum carries me to the other side, if I get a clear path, then I'll take that long trade. But if the sellers end up winning and this area breaks, well, then I'm going to look for shorts because I don't know what's going to happen. So I can only let my indicators tell me what is currently happening. And I love this picture. I'll drop it in the room for you. I do this every day, and it never gets old to me because the reminder's good for me too, guys. I am just as human as the rest of you. And that's termination conditions at a line, guys. Is everybody okay with that? Price reached Fibonacci resistance. Absolutely no triggers break. Sit on your hands. Do nothing. You don't know what's going to happen. Divergence high, resistance. They have the potential to break, but they're not broken yet. Is this going to be the breakout of the range? Hell, I don't know. We'll find out. Divergence high. The triggers don't break, guys. And look at that. Pivot stop out low. Pivot stop out high. And now I'm starting to get odds favorable. And now my path is clear. And now we're going to talk about how to get into that market in the event that the rules are met. But before we do that, I want to talk about one more termination condition. I want to talk about using divergence, not lines. I want to talk about using a small chart, not a large chart. You guys remember so far, the large chart's done everything. The large chart told you which way you should be looking. The large chart told you that the momentum was advantageous. And the large chart told you that we hadn't reached any areas where the people in control may react. So now what we're going to do is we're going to go to a small chart. We're going to go to a refinement chart. We're going to take that one bar on a large chart and we're going to whittle it down to 15 to 30 bars on a smaller, faster chart. It looks a lot like this. That one bar that defines direction, that one bar that defines momentum, that one bar that defines whether or not you've reached an area. Inside of that one bar is all of this stuff going on. All of these little fluctuations, these ups, these downs, these ticks, 15 to 30 bars. We're going to use this chart to figure out right where that tail is likely to happen. And it's going to happen more often than not at an area inside of favorable large triggers. And that's rule number 3. You're going to use a limit order. You're going to wait for the market to come to you. You're going to let the small crowd fight everything that the large crowd's doing. And you're going to use a limit order to buy or sell a pullback, that small retracement in price created by the small crowd. And you're going to buy it or sell it at an area inside of favorable large triggers. And that's kind of the recipe, guys. Giving yourself a bounce point, giving yourself a line on the smaller, faster chart inside of favorable large triggers. And you know what I didn't do? And that was totally something shiny. And it was like I saw a squirrel. We were going to talk about one more termination condition before we got to those entries. And I apologize. Rather than using the large chart, we're going to use the small chart. We're going to be able to identify change. And guys, that was a total gear change. And I apologize for that. I went back to my 2 charts and I got excited about the entry. But before we do that, I want to give you one more advantage. Sometimes the market turns from nowhere, right? Sometimes it doesn't reach an area and it goes down or it goes up. Sometimes you have odds favorable momentum and it's like it just doesn't about face. There's one more termination condition that we can use on the small chart that's going to help you identify this change. And I sincerely apologize for changing gears like that. We can use 3 divergences. Rather than using fibs or 1-to-1s or anything like that, we're going to use those cyan and magenta lines, that visual representation of a loss of momentum. When it happens 3 times in the same price range, it may stop the market. It may terminate the market. This is a small chart termination condition. And I'm going to write this down in my biggest, boldest, brightest crayon. This is the only termination condition that I will respect on a small chart. 3 divergences in the same price range may terminate the trend, may create a push in the wrong direction, the other direction. These 3 divergences become more powerful when your small triggers get into that anything can happen state, when you no longer have odds favorable momentum, but rather those weakened triggers. And it becomes more powerful still when that third pivot from a low is higher than the previous, creating what we call a head and shoulders pattern, or when that third pivot from a high is lower than the previous, creating that head and shoulders pattern. Guys, this look at a low and this look at a high is going to help you gauge the change that you can't see, on that. My goodness, I keep missing the pictures. On that slower chart. You'll see 3 down here and that market pushes up, or 3 up here and that market pushes down. These 3 divergences are also going to help you tremendously to manage these trades. If you get into the perfect trade, or maybe you get into the medium probability trade, if 3 divergences print on your smaller chart, it gives you the opportunity to manage out of the trade. It gives you the opportunity to recognize change that's happening and just saying to yourself, I don't have to wish. I don't have to hope that market keeps going down because I have a visual indicator that it's time to jump ship, take profits, get out, and I'll wait for the next best opportunity. So guys, that's termination conditions. That is giving yourself a clear path. That's using the large chart to define the areas, the momentum, and all that good stuff. And now we're going back to where I accidentally went before. When we have it, we're going to go to the small chart. We're going to go to that smaller, faster chart, that refinement chart. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Rule number 3 is designed to get you in the absolute best spot. On a small chart, trades come from lines. On the large chart, we use them to define termination conditions. On the small chart, we'll use them as entry points. We'll use fibs, we'll use mid bands, and we'll use those yellow 1-to-1s, guys. And the key to rule number 3, the key to getting in where the market is most likely to continue, is that you are buying or selling an area, fibs, mid bands, yellow 1-to-1s, that are inside of what we call favorable large triggers. And favorable large triggers means on your smaller chart, on your faster chart, the large triggers, which are the smooth dashed lines, the ones that work with the small triggers to create momentum, and your synthetic triggers, the same looking dashed lines, but they've got little angles on them to help differentiate. They should be wide in the direction of the trend. They should be one on top of the other, overlapping, because when they are, that tightened look on the trigger lines gives you the smallest possible window of opportunity. And that window of opportunity is where the market is most likely to continue. So the tighter your trigger lines, the smaller the window. The smaller the window, the less risk. And guys, the synthetic triggers aren't anything magical. All the synthetic triggers are the large triggers from the large chart. And when they work together, they create this advantage. They create this opportunity. When they're one on top of the other, it gives you the absolutely smallest window to buy or sell an area inside of favorable large triggers. And if you look at the tail here on the NASDAQ, notice that when I circle the tail, that was the pullback to an area of resistance right inside of those large triggers. Guys, we're about to talk about how to find that entry and how to capitalize with the momentum all the way to the termination condition. And it's nice when the market sets these up for me. So when the rules are met on the large chart, guys, when you have the advantage of momentum, when you have that clear path, when everything says that you should be looking for a long trade in this instance, this is what your small chart's going to look like. You're going to have, hopefully, odds favorable momentum, smalls outside of the large, reassuring you that the momentum on the large chart is being echoed on the small chart. Because remember, it's a smaller, faster chart. Let's let them match. You're going to turn your attention to the favorable large triggers. You're going to look at the large. You're going to look at the synthetic. Are they going up? Are they with the trend? Are they wide, like sharks about to breach? And then you're going to look for those areas, guys. Fibs, mid-bands, yellow one-to-ones. And if you have them, those are your areas to watch. But you have to wait for the reversal bar. You have to wait for the pullback to start, for that small crowd to start fighting the large crowd. And at the time of the reversal bar, you're going to create a window of opportunity. You can do it actually with a drawing tool if you want. I think that's a great way for new users to get comfortable with it. Or you can just mentally, you're looking for your highest point of support, the line closest to price. And the lowest point of support, the line furthest from price, inside of favorable large triggers. And guys, when you annotate your charts, I want you to write inside of favorable large triggers as many times as you can possibly stand. Because what it is these moving averages. That's all the trigger lines are. They're just moving averages. When the price corrects itself back to the average, if you have a line inside of it, if you have fibs, mid-bands, yellow one-to-ones, they behave like a brick wall to a tennis ball, guys. They give it a point to bounce. They give it a place to ricochet. And you are going to activate a limit order at the top of that window, at the highest point of support, because remember, your large chart's leading the way. Your large chart told you to look for this entry, and your large chart is absolutely railing to the upside with momentum. And it is screaming that direction with nothing in the way to create a bounce. So you're going to activate a limit order when you get the reversal bar right at the highest point of support, maybe even a tick or two above, because we just don't expect the small crowd to get that much work done. Your window of opportunities from the highest point of support to the lowest point of support inside of those favorable large triggers. If the small crowd pushes you back, well, then you're in a trade. You're in a trade with the advantage of momentum, with the advantage of a clear path, with having entered where the market is most likely to continue. For you guys that are new with me, CJ, Mike, Diver, or Scott, whichever, Tony, who else? Don, guys, all you guys that are brand new with me, focus on this entry. Give it a couple weeks. Get really good at the advantages in the entry, because great entries create manageable trades, and great entries create trust in the large chart, and great entries reduce risk and give you the most profit potential. Sometimes the small crowd is going to push a little harder than we anticipate, and the market may go down to that lowest point inside of favorable large triggers. If it does, I want you to just put a smile on your face and say, it's cool, I'm still in the window. I still have every advantage, life is good. And then one of the greatest things about what we do, guys, is we can manage risk before we ever manage profit. We can manage our exposure before we ever try to collect money. And we do that through the window of opportunity. If we know where the market is most likely to continue, well, then we know where it shouldn't go. Great question. We put it 4 or 5 ticks outside of the window of opportunity, where the market shouldn't go. Because once it starts railing down here below where it should bounce, well, then I don't want to be in that trade anymore. And I'm okay taking a loser every now and then, because just the laws of mathematics, right? Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And guys, I'm never going to tell you you're going to take 100% winners. I would expect you to just put two fingers on my chest and tell me I'm full of shit. I don't know many traders that don't take losers, but what I do know is that when I have these advantages in place, I'm taking a trade that typically wins 70 to 80% of the time, which means that I'm okay with that little cost of doing business. And my goal for you guys, my hope for you guys, is that you just never miss this entry. You never talk yourself out of this entry with all these advantages. You focus on getting into the best of the best spot, because this is the look and this is the trade. And there's your 70 to 80% of the time, guys. Profit target reach, 70 to 80% of the time. Creating confidence through the memory of success. Creating opportunity through advantage, right? And then once it begins to go in the direction of the trade, good morning, Miss Debbie. I'm going to reduce my risk even further. I'm going to put it below that reversal bar that's gone in the direction of the trade, that's gone with the momentum, with the clear path. And guys, with this entry methodology, it's not uncommon to see you guys getting into the market with 3, 4, 5 ticks of risk, minimizing risk dramatically based on beautiful entries. And that is the high probability trend trade. And the cool thing is you can back test it. You can study it. You can circle those tails, and I'm trying to make it look, whoops. Man, I'm struggling this morning. If I circle the tail on the large chart, if I have odds favorable momentum, if I have a clear path, and it lines up, here it is right here, guys. There's a mid band right inside of those triggers. And notice that that's the only line. That is the only line inside of those triggers, guys. There was one spot where the market was likely to bounce. My initial stop was outside of them, giving it a little room to breathe. And sure enough, it continued all the way down. And if I scroll back, really on any time frame, and I look for those tails with all that momentum, it pulls right back to a mid band. That mid band is right inside of favorable large triggers. And if I scroll back a little bit more, man, that was a huge run up. Let's go to crude oil and see if we can find something. Sometimes that termination condition, I get one of those 50-50s, one of those potential to breaks. Let's see where that pulled back to. Right to support inside of favorable large triggers. The idea is that you can be a little patient, that you can be a little calm, that you begin to develop trust in the idea that momentum leads the way, that momentum can break areas, and then you go from beyond that high probability trend trade to being comfortable capturing what we call a medium probability trend trade. When maybe the smalls break through but the large don't, you still get a pullback to an area of resistance inside of favorable large triggers. You still create opportunities to get to that next area with all of the momentum. So, guys, that's the high probability trend trade. That's the best of the best. This is your focus for the first 20 days. We are going to recognize the advantages, embrace the idea that there's no reason to trade into areas that may stop the market. Embrace the idea that there's no reason to get caught in indecision, and give yourself a statistical advantage each and every time you take a trade. Guys, I'm going to take 5 minutes. I'm going to leave you with the S&P. When I come back, we're going to go through a checklist to get you into the market. I'm going to give you a plan, and we're going to start looking at your pictures. I'll be back in 5 minutes. When I come back, we will get into the process of chart review. Back in a minute, guys. All right, y'all, let's get back to work. Sorry about that. I had a barking dog I had to take care of. It happens sometimes. We rescued a puppy last weekend, and she is still coming to terms with the world, but she's pretty cool. So let's talk about high probability trend trade, right? We talked about the advantages. We focused on understanding, guys, that when the rules are met, there's advantages. I want you to start talking to yourself in terms of advantages. As you look at your charts, I want you to say to yourself, hey, it's going up, it's going down. I want you to say to yourself, man, I've got momentum or I don't have momentum. And then understand what it means. If I have momentum, well, then this is a market that's likely to continue in the direction of the trade. And if I don't have that look, anything can happen up or down, which doesn't necessarily kill a trade. But what it can do is it can get your mind right, ready for that management, right? When something goes away, when advantage isn't present, you can put on your management hat. You can use your chart reading and you can start saying, well, I don't have great momentum, so maybe I'll look for those divergences on a smaller chart, or I don't have a clear path, so I'm going to make sure that I have momentum. I'm going to make sure that my entry is the best of the best and maybe get into that medium probability trade. And then if you don't have an entry area, well, then you're just kind of hoping at that point. That's the one that I don't particularly care to get rid of. I like my areas inside a favorable large trend. So when looking for the high probability trend trade, guys, I'm going to give you a checklist. Of course, I don't tell you what to do. Not my job. But I have found that if you have a very pragmatic, concrete set of rules to get you into a trade, and those rules have been proven to win more than they lose, then guys, this is an outstanding way to make sure that you're getting into the market with the most advantages. And I've never had anybody use this checklist, able to check yes to all of them, and not do better than 70%. And then Scott, I just wanted to make sure, did you get your answer on the stop? I apologize. I usually check back, but I know I talked about it. I just wanted to make sure that it made sense. Okay, cool. And guys, if I ever answer too quickly or don't get you the answer that you need, tell me, please. Sometimes I get on a groove and it just happens. So never had anybody do worse than 70. Guys, I've had people go back and use bots to test the methodology over like 400 trades, over like 300 days. And they end up in that 89-90% range. I like to say you'll 70 to 80%, right? Let's keep it realistic. But is the market coming from a good top or bottom? Is there a termination that's creating a full reversal? If there is, outstanding. You're in that 70 to 80% range. If there's not, you can still take the trade. But you're going to use those three divergences on the smaller, faster chart to help you out with it, to make sure that you can see change happening. Did you have odds favorable momentum? No terminations, area inside. All those things that you need to take a trade. Guys, if you print this out and police yourself each and every time, and of course, these are all great things to write on the large chart, right? Write these on there. Make sure that you're making sure that you're following the rules. And then as you create recognition, here's a picture of a termination that creates a full reversal, straight from the lesson plan. Here's your odds favorable. Here's your anything can happen, defined for you visually. No trades because the path isn't clear. The path is clear, and the path has the potential to clear. And then finally, there's window of opportunity going up and going down. So I'm going to drop both of these in the room, guys. Print the checklist out. Put it on your desktop. Take the checklist with the pictures. Study it for a few minutes every morning. Get those looks squared away, what it is that you're looking for. Both of those just dropped into the room. And then finally, I'm going to give you the KISS plan. And it's the Keep It Simple Sunshine plan. It is the stepping stone in your learning journey, guys. And I said it in the beginning, and I want to say it again, because sometimes people are like, man, I don't want to wait 3 hours in between trades. I need to be busier than that, Mark. Guys, this is the one that's going to help teach you to, uh-oh. All right, do you have me now? Sorry about that, guys. Has it been that way since I came back? Or did it just happen? Okay, cool. I don't know why. Discord loves to mess with me. So this, okay, awesome. Cool. Thanks, guys. Always tell me if I'm talking, I do, Joel. If I'm talking and it goes blank, guys, yeah, it's always tell me because I don't know. I'll just keep rambling. Yeah, it's the dog's fault. No, she's too cute to be at fault. The stepping stone in your learning journey, guys, it's designed to optimize your chances of success with the high probability trend trade and with that 50-50 trade, that medium probability trade. And it's going to give you the best chance of success with both right here on this one simple plan. You got up to answer the dog. And you know what? And Brian, that's very realistic because, and let me show you something, guys. And this is what people forget. And Brian, thank you for saying that. It's this trade is a trade that typically wins 70 to 80% of the time, right? In this trade, this is the one that if this was the only trade that you took, 70% is very realistic. The second you add in a medium probability trade, guys, this one isn't 70 to 80%. This is probably closer to 50%. It's still not a clear path and things don't work. And then, Brian, you made the best point ever, is that it allows you to manage your losses, right? It allows you to lose less, to win more. And I know people that have won in the 30 to 40% range, but their winners are so much better than their losers that they're still up money every day. So you build the foundation with the high probability trend trade. You build the foundation, you learn to get in. And then through simulation, study, class feedback, and continuous practice, you're going to create a plan that suits you. You're going to create a plan that you're like, man, I keep seeing this pattern. CJ, you had a great example of it earlier today. I keep seeing this pattern off a termination condition, and there's an opportunity for me to make $300-400 in a really quick pop. And you'll do that with your experience reading the indicators, guys. But this keeps you focused in the beginning as you learn to read your charts. This keeps you focused in the beginning as you just get in tune with being able to recognize advantages on the spot. Your simple plan for consistency. Never fight the large chart direction or triggers. 60 to 70% of the most common mistakes that new users make can be avoided if you never fight the large chart direction. If it's green, only go up. If it's red, only go down. Again, that will change over time probably. And don't fight momentum, guys. Don't play chicken with a semi. If you can keep that as a constant, you're 60% better than the rest of the world in most cases. You're going to define your entry, guys. I want you to take about 20 days to get into the market at the right spot. Take about 20 days of learning to trust the area inside of favorable large triggers. Take about 20 days of being willing to just sit on your hands if it's not great, right? Because great entries create manageable trades. Your entry is very pragmatic in the beginning. Your entry is very mechanical. It's very emotionless. If your only option is rules met or rules not met, you're eliminating all the hopes and fears, right? You're just doing it either is or isn't. These great entries, this mechanical style is perfect for the new user learning to read their charts. And a very mechanical, methodical approach to management tends to be the most advantageous because once again, it eliminates the opinion, it eliminates the hope. And everything with this very pragmatic management, it starts with the right entry. It starts with the best of the best entry, that area inside of favorable large triggers. And when you get in, your initial stop is where the market shouldn't go, 4 or 5 ticks above that highest point of resistance in this case. Guys, if you look at your ATM strategies, your trade strategies, stop placement strategies in NinjaTrader 8, Nexgen has provided you some. And for crude oil, for the ES, your initial stop is at 12 ticks. And that's what it's set. And And I just want to remind you guys that 12 ticks is not the correct stop. 12 ticks gives you reaction time to put the stop where the correct stop goes. This is an entry at 92 and a quarter. This particular stop is about 16 ticks off. It's about 4 points off. And if you put it at an arbitrary 12, well, then you run the risk of getting stopped out before you ever get to the other side of that window. So correct stop placement, you're managing your risk before you're managing your profits. If it goes up there, you lose a little bit. You don't lose a lot because you didn't put it 3 miles above hoping that it just reverses and the gods smile on you. But more often than not with this high probability trend trade, you're going to receive a reversal bar. You're going to get that down bar in the direction of the trade. This is your indication that it's starting to do everything that you want it to do. It's going with momentum. It's going with direction. It's going with that clear path. And you're going to reduce your risk a couple ticks above that reversal bar. And now you've managed your risk once again, and you've lessened the blow should it decide to come up and hit your stop. And you're just let it be, whatever it is. You're either going to get stopped out or you're going to hit your first target. And those are the only two options here. And there's nothing you can do to affect that decision. So sit on your hands, roll back from your screen, and either get stopped out for a small loss, which is a normal part of a positive equity curve, or let it hit that first target, guys. And your first target is an aggravating $100 away. Your first target is a small win. Your first target is a confidence-inspiring $100. You're going to hear Ninja Trader tell you that you just won. You're going to feel your pulse slow down. Your palms are going to start to dry up. You just got paid. And getting paid creates confidence. You're like, yes, I had momentum and a clear path, and now I got paid, and life is good. And you're going to move your stop to break even. And you're like, now I have no risk on this trade. And all of this stop movement to break even, all of this taking quick profits is designed to get you in the mindset of believing that the large chart led the way, believing that the large chart is the reason that you entered this trade in the first place. Very often, people take these trades and they forget that they had odds favorable momentum on a higher time frame. They forget that there was nothing in the way, and they let these little fluctuations in price on a smaller, faster chart, these little ticks, take them out of the market, create fear. So this $100, this break-even stop, is designed to help you kind of fight that fear in the beginning. To just remember, I've got nothing to lose, and I've already been paid, and the large chart says we're going down. And about 70 to 80% of the time, give or take, you're going to hit that second target. And the second target is even kind of short-sighted. It's only $200. Which means that on 2 contracts, 1 trade, every advantage, you have the potential 70-80% of the time to make that $300, right? Or even if you get stopped break even 3 times in a row, that's still $300. And guys, $300 every day of the week, and trust me, that is a tiny little goal, is a $1,500 week, guys. And that's a $6,000 month and a $72,000 year from either 1 trade making it or 3 trades not, right? And the idea is that you learn to read, you learn to trust, you learn to take these trades without hesitation because they create the most optimal chances of success. And then once you have this high probability trend trade entry down, once you're comfortable with momentum and you get a little better with reading your indicators, you can add in that 50-50 trade, that potential to break, but one area with the potential to break. And it'll keep you focused on the best entry condition, having the momentum, no divergences from a good top or bottom. And the second you add this into your mix, it's not realistic to expect 70 to 80% anymore, is it? Right, Brian? Now you go down maybe to the 60s, even like 55. 50. But if you're always capable of winning more than you lose, I've seen it go as low as 30%. And then with management, you'll create a plan tailored to your needs based on your ability to read the charts the same way you did on finding entries. And what happens is you'll present in the room and you'll say, hey, Mark, I took this trade. And I had this entry, and I had momentum and a clear path. And this little blue line scared the hell out of me. So I exited right there. And I made 5 points, and it was a great trade. What do you think? And I'm going to go through it, and I'm going to review it. I'm going to say, look at the momentum on the large chart. Outstanding. Look at that clear path. I mean, there's nothing in the way. It's just a big sea of red. You got in at the best entry possible. I mean, like a sniper sitting on a hilltop. And when you took your exit, what had happened? What had changed? Well, your momentum was still the strongest we could ever hope for. Your path was as clear as it could ever be. And every indicator on every chart said that market was most likely to go down. This becomes an opportunity to take that 5-point trade and turn it into a 12-point trade. This creates an opportunity to take profits at your scary point and let the second contract run. And every great entry, guys, every great entry creates an opportunity for management, whether it is learning to hold longer, whether it's understanding when it's time to get out a little sooner. And the more that you post in the room, the more trades that you share, showing me not just your great entry, but show me what happened after your great entry. Show me what the market did. Show me where your triggers are. We'll be able to work together to kind of refine your plan. You'll begin to build your own plan. And I'm going to give you a template to build your own plan. And this is using the exact same premise of identifying your entry first, guys. The entry has to be the highest probability. The entry has to be the statistical advantage. You're going to define it. You're going to take pictures of it, longs and shorts. And this has to be your perfect picture, the thing that you want to repeat each and every day. And you're going to drop those pictures into your favorite looks. Maybe you start a new section. This is my new momentum trade, and this is the best of the best looks. And guys, the wonderful thing about what we do here is that if you tell me, hey, Mark, I'm really good with the high probability trend trade. I'm consistent. I'm making money. I'd like to add a trade to it. This is what I'm working on. Here's my rules for entry. Here's some pictures of it. Will you do me a favor? Will you hold me accountable to these rules? Will you hold me accountable to what it is that I'm trying to accomplish here? Because it has a tendency to have me trading into termination conditions, and I know I'm going to make that mistake. So this is what I'm looking for, and this is what it looks like. And now you have an understanding of what I'm working on. Will you help me? And I'm going to be like, hell yeah, this is fun. I love building trading plans. I love teaching new patterns. I love getting in and you guys teaching me patterns. That's really my favorite part of what I do. So I'm going to give you guys the KISS plan. I'm going to give you guys the template if you want to build. Oh, it looks like I already did. I'm even going to give you my spreadsheet right now, because it's got all the great stuff on there, guys. It's got some pictures of the best of the best. It's got pictures from clients. It's got things about management. It's got patterns that repeat themselves over and over. It's got termination conditions if you want to look at them. It's got all these Nexgen user trades. It's great study opportunity. Crack a beer, look at them. You'll be just fine. And then your job is to fill out this side of it, right? To fill out your page of your looks, to take what is on my page and mimic it with your own pictures. Create this database of patterns so that you can have statistical advantages, guys. And that's it. That's my first hour. It goes a little bit longer, especially when I know I have new people in the room. Keep it focused initially. 3 rules, 2 charts. Post in the room as much as you can. Use that spreadsheet, guys. Those were the 2 things that I did not do when I started with the software, and I was liberated from my money rapidly. Simulate, simulate, simulate. Don't wait until you think you have it down. Don't say, well, I didn't want to simulate because I don't really understand the rules. The easiest way to learn the rules is to break them. Be okay breaking them. Just show me the picture so that we can talk about them. And one more thing, you're not in charge. Remember that. It actually makes trading a lot easier. If you accept the fact right now that the market doesn't care about you, the market doesn't care what you want, the market doesn't care what you hope for, the market doesn't even know that you exist, even though it feels like there's cameras behind you every now and then, the big money is going to move the market. The big money is going to create trends. The big money is going to establish momentum. And that's Norbert. We named him Norbert. This is big money, guys. Be a remora. Let this guy do all the hard work. Let him establish the trend and create the momentum. Let him react to the areas. And then when he says, you know what, it's cool, get you some. Be a remora, jump in, get fed, get out before he has to make decisions again, before the next frenzy. Because he just doesn't care. Look at this. Smalls are below the large. Large are wide, they're angled down. Notice how the area never broke. It had the potential to break. I didn't have a clear path, and then I gave up momentum. And then I gave up momentum a second time. Guys, if you're following the KISS plan, you avoided this loser. If you are good at reading your charts, you managed out of it before it created a loser. It was an opportunity, but it wasn't a high probability opportunity. Are there any questions about the high probability trend trade, guys? Are there any questions about momentum? Are there any questions about direction? Are there any questions about termination conditions? The best way to learn termination conditions is to just scroll back and see how often that they happen. And if you have a question about one, all you have to do is take that picture and drop it in the room. There's your pivot stop out. There's your pivot stop out. There's your clear path that didn't work at 934. Was that part of our 70%? Let's go take a look at 934. Was that part of our 20 to 30%, or did the market give us an opportunity to manage out through divergences? 1, 2, 3 divergences. Do you see how that works? Even with a clear path, even with odds favorable, 3 divergences in the same price range say, hey, jump ship. We may push up just a little bit further. Everything that I talk about, guys, repeats itself every day. Everything that I show you isn't something that I handpicked. It's something that happens every day in the market. If you go back to the study guide, the exact same entry, guys, this is from 2021. The plan that Nexgen has been teaching has, honest to goodness, been around for probably 20 years. Let an area break. And if the area holds, let everything roll. And if it rolls, look for an opportunity. That's your first shot. And then if everything is strong, look for a trend trade. And keep doing this until we reach the next termination. And if the termination holds, let it roll. Go the other direction. Guys, this picture has been around forever. I don't even know when it was made, but I've been staring at it for years. That's essentially Nexgen plan. And now we're going to start looking at what you guys are doing. I'm going to scroll to the top of the room, and I'm going to look at the charts that you guys have posted. I'm going to talk about them, not whether or not I like them or don't like them, whether I think they were good or bad. I'm going to talk about them in terms of what kind of advantages were there. What do I see? What did you see? Gino got us going today, and Gino had an awesome looking momentum with a clear path, and you can see that he took an entry and got paid. I love that. There's 360. And then the triggers start to weaken a little bit. And Gino says, man, with the weak triggers, but the path is clear and everything's still going down, I'm going to take one more shot at the short. And he did. He took another shot at the short, got in a little early, and then he said, oh, that's too soon. I know where my stop should be. Let me add on a couple. And then when 3 divergences print, Gino, that was your opportunity to get out, to not take a loss. Outstanding. Great management. And then Joel, everything says up. The path is clear. The momentum is the strongest. The pullback to the area. And look at the money. Bing, bang, boom. Absolutely perfect, Joel. Couldn't do it any better. And then Gino, there's that short. Man, I love it. Everything says down. You take your entry. It's a shade outside, but you've got momentum. You've got clear path, and you take it all the way down to the fibs. You didn't let anything on the small chart scare you out. Solid work, Gino. And then that's the easy one, right? Everything says up. The path is clear. Look at the entry. Virtually no risk. And I'm not sure why you got out so quick. Let me see. Gino, I'm not sure why you got out there with everything up, clear path, screaming to the upside, but you're still able to make money. Pick the entry like they tell us. Had the eye of resistance. Pulled the cord for a small profit as things got whipped around. Already reached your goal. This was just extra. Took advantage of moving markets. Cautious eye. Got it. Didn't have to force anything. And that was the best look out of all of them, Gino. And that's the one that you jumped out of. Isn't that funny? This was the best look on any of the charts that you posted. And that's the one that you got out of early. That's the easy look. Nice job, dude. That's okay. Gino, it's easier, though, when you have that entry, isn't it? Look at the risk, or the lack thereof. From your entry at 77.50, you had about 4 ticks of risk, right? Take 3 off where you're scared. Let one of them run. See what happens. Even with that $50 risk, you still can't. You can't lose. There's no way to lose. That's one of the easiest ways to create bravery, Gino, is don't take them all off at the same place. Always leave one runner when the momentum is strong. And do it on sim. You just have to develop trust. That's all it is. It's just a trust thing. Trust takes a while to build. Large chart leads the way, though. We always get in because of what it says, but we're all so inclined to get out because of what the small chart says. Has anybody else noticed that? The large chart says go. Large chart says strong. Large chart says, oh, man, this is perfect. And you're like, oh, but my small chart went down just a little bit. All right, Joel, not a good top. 50-50, awesome momentum, no divergence, perfect entry. And when divergence prints, you take an exit. Joel, that's outstanding. That is perfect management on a 50-50 trade. No divergence, strong triggers, perfect entry, low risk, divergence prints. Your exit was a little bit late, but great job, Joel. Really focusing on following those rules lately. It's showing in your trading. And then Gino, again, everything says down, the path is clear. You're just with that strong trend. You take it from the mid band. Second divergence. Gino, you're missing some fibs, brother. You don't have your synthetics over here. If you did, you would have seen that this was very much a 50-50 with weak triggers. You might have managed out just a little bit quicker, but you still managed to make money on it. Nice job, dude. And for those of you that are new, this is what we do. We come in and we look at what you're doing. Joel, no clear path. You reached support and none of the triggers had broken through yet. So you said, that's not my trade. Doesn't fit my rules. I'm okay to miss it. Whatever happens next, it's all right. It doesn't fit my plan. One of the hardest things to do, guys, is to stick to your plan when that little opinion bug on your shoulder starts talking. And then this one is beautiful, odds favorable, 50-50. One divergence didn't make it, or no divergence didn't make it. One divergence, and off you go, right off the mid-band. It didn't fit your plan, but you're taking pictures and you're studying it because one day it might, right? One day it might. Lyle, did we ever get your question answered about the black and red? All right, JW. You're welcome, Joel. Okay, cool, Lyle. JW, we're going to look at it here. I like this look, JW. Odds favorable momentum. It has the potential to break, and you identified that. You made sure that you knew that even with the momentum, the path wasn't clear, right? Good stuff. All right, David. And I want you to see the difference between great entries and emotional entries, right? JW, you got in at the top of the triggers, not at the area inside of favorable large triggers. And that is approximately 7 ticks. 7 ticks difference. Which means that you had, this is crude oil. That means you had $280 worth of additional risk. But you also had $280 less profit potential. Does that make sense, JW? Are you with me? And not just JW. This is for everybody. This is a great lesson on learning to trust the entries, and it takes a while. The area is not broken, right? And it's not really even smashing through. It's kind of going. No divergence, I love it. So let's play the what if game. What if you got in at 13 instead of 6? Or no, is it? You got in at 03. It's hard, I don't have the stamp over here. This becomes your problem area, right? This fib is the one that you're hoping is breaking, and you've got 4 contracts on there. From 06 to your problem area, you've got about $40 worth of profit. From down here at 00, you've got like $300 worth of profit on 3 of those contracts, or $100 profit. Big difference. And then you get in and you take half off, right? This is my trouble spot. This is the area that isn't broken. This is where things aren't really working the way I want. You have room to get to break even. You have room to exit with divergence on that 50-50. And it turns this trade that's fueled in hope. And that is a 15, that's 21 ticks loss, which is cool. I'm sure you're on sim. But there's so many great lessons here. The first one is trust the entry, right? When you get in at the point where the market is most likely to continue, this was your window of opportunity right here. This window of opportunity gave you room to manage. It gave you a reversal bar to put your stop behind. That run right there, that pink line right here, let me make it green. That's the one that gets you back to the trouble spot, right? That's the one that gets you back to the trouble spot. This is where I'm taking at least half of my position off. This is where I'm getting to a 0 loss level, because you stated it perfectly when you said that the path wasn't clear, right? So it's not a high probability, which means that it has to be managed a little more assertively. And one of the reasons that I like talking about what isn't present in terms of advantages is when you know you don't have a clear path, JW, you switch your thinking. You switch from, oh, this is going to be a home run because I've got tons of momentum and a clear path, to if something goes wrong, if something changes, if there is a deviation in the goodness, I'm going to exit this trade. I'm going to get out some of it at a problem area. And it creates this totally different line of thinking. And that's the difference between high probability and medium probability. And it kind of goes back to just illustrating. And JW, I had the fear of missing out like nobody's business. And that's all that is. What if it goes without me, right? You start learning to trust this simple concept. You start learning to trust these things. Man, I've been there. Guys, when I point out what's going on with your trade and it sounds like I've rehearsed it, it's because I've done it. It's because I've done it so many stinking times that I recognize it at a moment's notice. So JW, a great drill to really start to develop that trust is go back and circle your tails on the large chart. Go back and circle those bounces and see where they're coming from. And just start training that look into your brain, right? Open up your spreadsheet and go to that third page. Let's just look at it. Gary's perfect long. And it bounces right off support inside of favorable large triggers. And let's go to perfect trend trade short. And it bounces right off of the midband. And what you do is you start seeing this and you start saying, well, egads and little fishes, maybe that is my best entry. Maybe I can trust that limit order, right? Maybe it is okay to sell a market when the small chart's on the way up. And that's how you do it. And that's all that we're doing right now is we're developing an awareness, and that awareness creates trust. But the more time you see something, there's Gary's perfect long. Right from the area inside of favorable large triggers. Ziva's perfect short. Right from an area inside of favorable large triggers. High probability trend trade long. Right from the area inside of favorable large triggers. Like a broken freaking record, right? JW, your reads are outstanding. You know exactly what you should be doing. Now you're just developing the trust to do it in the right places and understanding that when one of the advantages are gone, there's no reason to hope, right? It's cool to be aggressive. Take a base hit, right? I would be stoked to take 4 contracts off at $100. Because JW, that's $400, brother. That's a $2,000 week if that's what you do, right? That's an $8,000 month. That's a $96,000 year from having to manage out of your medium probability trade at the trouble spot. Sometimes you got to remind ourselves that we're in it to get paid. I think it's a great read. I think that the conditions were perfect for entry. And now it's just that little refinement bit, that little bit of getting you back to where you want to be, that little bit of just getting you to that best entry with the least amount of risk. You got this, brother. I got no worries about you. And then CJ, awesome termination. You are fighting direction and momentum, but you're putting a lot of stock in a pivot stop out at resistance, just like in the manual. You let your small chart show you immediate momentum, which I love. And you let it get below the midband, which I love. And you didn't get greedy. You got out at the trouble spot. CJ, this is rock star stuff, man. This is next level in your first week. Keep focusing on that pattern. Keep writing on the chart what it is that you're doing, why you're doing it, why you felt that was the right place to be, and you'll be able to repeat it and capitalize. I like this one. Gino says, let me show you how I can enter a trade. Odds favorable momentum to the downside. Clear path, absolutely. 2 divergences doesn't necessarily kill a trade. You still have strong triggers. It pulls back to resistance inside of favorable large triggers. Let's see what happens. What's the worst that could happen, Gino? You lose 2 points or you make 20? Do I have an after picture? Maybe Chef took the same one. Termination. Odds favorable, strong lines, room to profit, perfect entry, money, money. What should you be looking for here? You got kicked out of NT. That sucks, sorry. So C-Dub, if you get kicked out of NT, manage that for a small gain, perfect. If you get kicked out of NTA, sometimes it just happens. Open it back up. Sometimes it works out great when you open it back up. What I do is if I can't log in at all, like if no matter how hard I try, it keeps kicking me out before I can do anything, I always go to my documents folder. The first thing I'll do is I'll get rid of my cache and my tick. And what this does for me is it just kind of clears out the data that's in there. After that, I'll go to my temporary folder and I'll clear out all these temporary files. Cab taught me Control A, highlights everything. I'll just lose them, gone. And then I'll go to my workspaces and I'll get rid of my recovery folder. More often than not, that kind of fixes what's ailing it. If it doesn't, worst case scenario, sometimes you have to rebuild workspaces. And I know that's a pain in the ass. And guys, my brother has invested $250,000 with all these programmers to fix it and make it solid. And he is beta testing it. He's been beta testing it for the last week and he can't seem to make it crash. So he's almost at the point where he's going to give it to you guys. Hopefully it's a Christmas present. So I apologize for any inconveniences that are going on with it. But that's the easiest fix, C-Dub. And then Chef's Thoughts. Guide on the pullback. I love it. Manage your stops. I loved it. Circled tails for missed opportunities. And you know what? I like it, Chef. Right on. John Novak is Santa Claus. Sometimes, Gino. How do you enter this one, Chef? Do you enter at the mid band and hope it doesn't stop you out? Is there something that you're looking for there? Because this has fibs at 26 is what I'm seeing. And that pullback happened with two divergences right off at the fib. Yeah. So awesome patience. And then you capitalize. I think it's beautiful. C-Dub, the NASDAQ is scary fast, especially when you're new. I trade primarily the NASDAQ, but I'm at the point where I make decisions in a fraction of a second. Maybe not a fraction of a second, not that good, but in a couple seconds, rather than having to think through it and talk through it for 10 to 20. I love trading the NASDAQ. I love the opportunities that it presents, but you have to be really comfortable with your rules before you can do it. Chef, that's impossible. That's like feeding meth to 38 chickens and trying to catch them. Never happened. Great trade, Chef. Great patience, letting it break. That's not easy to do. That is not easy to do. And then Cav. Man, somebody asked, is that a good... Okay, we talked about that, Don. Just making sure. All right, Cav. Took a pullback into the large triggers, mid-band fib support, 1-to-1s on the 5-1. Lost the trade. Took another pullback on the 5-1. Reached both targets. So let's see. Where's your first one that you took? Termination condition, 1. Do you see it, Cav? Directly into... I do love the NASDAQ. Okay. Yeah, I did like... I've never hit 200, Ron. I've done it at about 140. It's a termination condition. There's got to be some difference. We missed you, Safia. Well, you went off and got good at it. I told you you were going to fire me one day. You didn't think I was serious, did you? All right, guys. Cav's in a trade, so we're going to do it. And then when he comes back, we'll talk about it. I'm sorry about that. Directly into a divergence high. Triggers peak, not smash. That's what I see. So not a clear path. Hey, David, we missed you. And then here I see loss of momentum. And now it's coupled with not a clear path. Oh my gosh, things are getting rough, right? And beautiful entries are beautiful entries, without a doubt. But trading into termination conditions, it just doesn't work out so much. And then it gave you a 3-tick potential stop. Gave a reversal bar to minimize risk on trade. Hoped it would go, and it didn't. Does that make sense to everybody? Price reaches divergence high, triggers don't break. This is rule number 2, not in effect, right? They're peaking. If you try to call it a 50-50, they're peaking. But divergence, reversal bar for management. This is very much hoping that the market goes up. And it doesn't. Safia, I've been trading NASDAQ longer than you. I started trading it before John Novak ever introduced it to you guys. I've gone back and forth on it. It depends on my ability to follow rules that day. In the beginning, I couldn't, and it killed me. So when Cav gets back, we'll take a look. We'll share that. We'll talk about it. He's in the middle of the trade. And then the next trade, with a clear path, easy money. Does everybody see that, the difference? No clear path, problematic. Clear path, odds favorable, pretty easy. That's a great lesson. That's an outstanding lesson. It doesn't have to be hard. And guys, just a reminder, if I ever miss one of your charts, it's okay to tell me. I don't think I've missed any yet today. I just want to make sure. Geo, everything's set up and cleared the path. You make some money. And then when it starts back up, you do it again. Geo, outstanding. Not really high probability trend trades. Just being able to utilize momentum and a large chart to capitalize a little bit. Jose to P. Same look, right? Everything says up. You didn't hit the one-to-ones yet. No divergence. Good look on the triggers. Pulls right back to support inside of favorable large triggers, and you capitalize. Very nicely done, Jose. And no reason to wait for confirmation, right? Because everything's set up. Great work, dude. It was a crazy girlfriend. It still is. But even the crazy girlfriend, you can figure out how to work with her, right? All right, CJ. Going for consistency. Termination, immediate momentum, quick entry above, getting out of the trouble. Freaking love it, CJ. Are you still in here? I hope you're still in here. That is the exact same trade going the other direction. That's what we call consistency. Nicely done. Is anyone else having fun? I'm having a good time. This is all we do. We're just going through. We're looking at it, seeing what's up. Not quite the gap, Joel, because price reached it before it made the bar. It was close. It was very close to a gap, but not quite a gap. But it is a bad top coming through. Not a horrible look at a short. I probably would have lost that one. It's close. If it's close, it's okay to err on the side of caution, right? And then Gino, once again, trend is down. Everything is down. You take your entry. Well, you take a momentum style entry, Gino, and then you held on for dear life. I'm not sure if you're in here. So a bad top in an uptrend, mid-band's got to be your first target. Guys, this is a great lesson. If the market is trending one direction and it doesn't reach the next area, let me show you. There's a great example right here on NASDAQ. Everything is going up and I can't get to the fib. Your mid-band is your first spot for a bounce, guys. And you've got to respect it a little bit. You've got to respect that mid-band just a little bit from a bad top. And you see it all the time. Bad bottom, comes back to the mid-band, respect it, continue the trend down. So what happened on this one, Gino, is it was an awesome entry. You had amazing momentum, right? And then you reached a trouble spot. And you took momentum to get into the trade, but you didn't let a loss of momentum take you out of the trade, if that makes sense. It gave you a reversal bar against the trade, and then it started back down. At this point, I'm sorry, did I say Gino? Sorry, I meant Geo. But Gino, I'm glad it makes sense to you too. If you're going to use momentum to get in, guys, it gave you a stop placement. You could have been break even behind that one. But when it can't get back below those triggers, well, you're losing the momentum, right? Make some money on these. And then wait and see if the next good one sets up. That's an enormous amount of risk. That's 220 per contract. That's huge. Let me see where I'm at. Dun, 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 dun. I get lost sometimes. David. Odds favorable, 50-50, no divergence, awesome entry, quick profits, divergence prints, gets out. David, I want you to high five yourself. That's outstanding. Not a clear path, no divergence, perfect entry, small risk, out at the trouble, out at your first spot, right? Make that money. And then with divergence prints without a clear path, you say, hey, I can get out of that one. David, rock star, brother. I feel like I missed something. Did I miss something? I don't think so. I had this fear that I was missing Tony. Tony, here you go. Seem to gravitate to break and retest. Would you take this trade? Just a back test. Would I take this trade? It's a good question. Let me see something real quick. You know, I like that you gravitate to break and retest. I really do, and I'm going to show you why I like it. Are you in here, Tony? This is one of my favorite questions. I'm going to go to the 50-50. Did he leave? That stinks. Would I take this trade? Well, guys, I guess this is for the rest of you. Odds favorable momentum on the 13-2. There's my first yes. Smalls outside of the large on the 5-1. There's my second yes. No divergence on the 5-1. There's my third yes. From a good top or bottom, there's my fourth yes. My rules from the KISS plan say enter at the area. Would I take this trade? I would be obligated to take this trade because this trade fit my rules 100%. So since it fits the rules perfectly, yes, I'd take it. Great read. And then I'm going to send this to him privately because I want to make sure that he gets that. Because if he's not in here, I think it's important that they get this. So guys, if you ever miss, if you are ever dropping stuff in the classroom and you have to leave, let me know. And I'll just do the analysis right off, right? Like I'll just do the analysis and we'll talk about it right there in the moment. I don't mind jumping someone to the front of the line if they have to go. But does everybody see how it fits it 100%? It's beautiful. That's the one that we shouldn't miss ever. That's the one that fits the KISS plan, guys. This is the one that creates opportunity. And then 1, 2, 3 divergences tells you to get out. I love everything about this trade. And I'm telling you guys, that's week 1. I have week 1 students that are taking these amazing looking trades. Week 1 students that are following a simple plan and finding profits. And then Cav, everything is screaming to the downside. You let it break, it pulls back, you catch it on the way down, and take it all the way to the fibs. Cav, that's a beautiful look, man. I like everything about it. Momentum, you let the path clear, kicking butt, taking names. Good stuff. Good top, heck yeah. Odds favorable, oh yeah. 50-50 on the one-to-ones, without a doubt. No divergence, get in. There's your first divergence on a 50-50 at the one-to-ones. And it pushes up, right? Missed the first one, small loser on the second one. Because you missed the best one, didn't you, Paul? All right, good lesson here, guys. Great lesson here. Area with the potential to break, right? No divergence, strong triggers, from a good top, everything says down. Guys, that's your entry. That's the one that you can't miss, right? Sometimes you have to go to the bathroom, the kids need you. That's okay, you miss it. Look at the difference between the first entry and the second entry. It's the same price, but now there's divergence and there's no clear path. If you're following the KISS plan, that's not your trade, right? He gets in, he waits for the reversal bar, and because he's in on the second best entry, it never gives him that $100. Getting in here, that's $100 pretty easy. One of the reasons that practicing your entries is so important, and Paul knows his entries, and I'm sure he was distracted doing something else at the moment. But when you get the best entry, it makes it easier to capitalize. When you take the easy entry, it makes it easier to capitalize. It makes it easier to manage. It always does. And then Cav. Put a limit order at the triggers, the mid band, the blue fib reached both targets. And that's just a little more momentum, right? Everything says up. And divergence from the one-to-ones is a great indication that it may push a little lower, Cav. And it does. And rather than just hoping, you let everything roll, go in the same direction again, and take the stab back. That's a beautiful trade. That is a beautiful trade. And then I can't really get on with your short there. I'm going to assume that was a mistake, potentially. Because it looks like you tried to go short at resistance against everything. Just didn't let it roll. Close it out manually. Gotcha. I see your closes. I also see short entries. So maybe that's when you hit target, close. Yeah, it's weird. Maybe because you closed it out manually, it gave it that look. It's an odd look. Great trade though, man. Great trade. So how we doing, everybody? I think that's it. And then Cav, you were in a trade. But when we looked at the one that you posted, you're long that didn't work right into that term, man. And it's a big difference between peak and smash. You're directly into the divergence high. The triggers are barely going. There was a loss of momentum. It even gave you a reversal bar to minimize a little bit. That is not classic Cav. That's okay. That was the man. I sure hope it runs to that fib. And it just didn't. And then outstanding recovery going the other direction. So good stuff. And now the NASDAQ, right? Look at that indecision as we come up on the fibs. It's like a seismograph. It's our big word for the day. Straight to support, to the tick. And look at the bounce. Gads and little fishes. Large chart defines the areas. Look at the bounce. It's amazing. I love it. So, Scott, Mike, how we doing, guys? I know it's a lot to take in the beginning. Who else do I have that's relatively new in here? And you don't even have to be brand new, guys. Just if you're working on stuff. How are we doing? We're talking a lot about advantages. And one of the things that I think that you're noticing a lot, and Scott, it gets easier every day. Hopefully the one thing that you're noticing is that rule number 2 is going to do an awful lot to help keep you on the right side of things. Rule number 2 keeps users safe more often than not. Rule number 2 is designed to keep you from trading into areas that may stop the market. The advantage of momentum is what allows areas to break, right? The advantage of momentum is what gets through these fibs when it's the absolute best of the best. And then just being able to refine it down to the best entry, guys. Avoiding that fear of missing out. Looking for the best of the best. What's chop chop, Jeremy? Am I going slow or are we in a choppy market? Chip, chop, chip. Just waiting, right? Yeah. So what do we see on the S&P? Termination. And then there was a short, right? Beautiful, but it was 50-50. Divergence takes you out of it. And now we're below all the resistance. We're above all the support. And it's a holding pattern. Thanks, Jeremy. And then on crude oil, my triggers don't match. I can't have momentum. I'm below resistance. Yeah, just hang on. You know what's cool is that with the exception of that one time that crude oil hit zero, I've never seen a market flatline. I've never seen a market only go right or only go left. It typically goes up and down, guys. It just doesn't always give you a statistical advantage. It doesn't always put you in a position where your rules are met. And that's a great time to stand up, to stretch your legs, to go do something, make a sandwich, pet your new dog. Do anything other than try to impose your will on a market that isn't going to allow it, right? And as we get more into the holidays, as we get closer to Christmas, guys, we're 4 days out from Christmas. There has to be an expectation that the market may slow down a little bit, right? There has to be an expectation that the volume thins out a little bit. Let's see what the volume is. Just jamming to dance music. I love it. Jeremy and his dubstep. So let's build, I just want to see, market analyzer. What is a market analyzer, guys? It just tells me what the volume is in the market. I typically use this when contracts roll. We'll be back before that. We'll be back 27th, Joel. And then we'll get through New Year's, and then we'll be back on the 2nd, full tilt. So just a couple days off. It's up there. 750,000 contracts being traded on the S&P. They just can't decide which way to go. So it's definitely moving. Let me scroll up to yesterday morning. John Novak put an announcement in there. Today is the 21st, right? Let me go see if I can find it. There's a lot of talking that goes on in these rooms. Here we go. All right, back to the bottom. Cam, man, when I'm doing all that work to find that post, don't you jump in here. Take my thunder. You guys want to see how I can kick Cam out of the room? Just kidding. Cam's always got my back. That's one from John, though, just in case you needed that. Guys, support's working, right? It's right into resistance on the S&P. Let's see what happens. Things are starting to lean up. Cam shafted. Oh man, Cam's gonna be so mad that you started that wrong, because he's gonna hear it from me all the time. Guys, it's 11 o'clock. I'm gonna take a break. I'm gonna go stretch my legs real quick. Do the same. Breathe through your eyelids a little bit. When I come back, it's real important, guys. I want you to lead the way. So, Scott, I know it's a lot to take in. If you've got any questions that I can help you with, let me know. Mike, the same is there for you, and really anyone in the room. It's a lot to take in when you're brand new. It is, isn't it, David? Hey, Gio, take care. Have a good one. There we go. I'll drop it again, guys. That's what David's talking about. Emotion free trading. I've read this one 3 times so far. I love it. Um, I don't get any kickbacks on it. It was a great read. A little bit about um, a little bit about just the emotional side of trading, and just things that help with it. A lot ways to think about things, different ways to think about things, which I'm a big fan of. And then there was another one here. Let me go ahead and post this, and then I'll take my break. It does, and you start using the language, David. I know that I did. This is a cool one on dopamine. Um, Really interesting read on dopamine, guys, and just that euphoric feeling that if you've ever had an awesome day, right, where you got lucky and you had a huge winner, and you try to keep recreating that little video. It's like 15 minutes, but it's a great video. I'm going to leave you guys with the S&P. We'll see if resistance holds or if support holds. I don't know. I don't have a guess. I'm going to go take a few minutes, guys. When I come back, I'd like you to lead the way. I'd like you to tell me what we're talking about. I want you to throw your questions in there. If you have pictures, post them. If you have questions, ask them. If you just want to talk about the great, wonderful world and the mysteries it holds, we can do that too. I'm cool with it. I'll see you guys in about 5. All right, y'all. Here we go. Last hour. Man, time flies when you're having fun, doesn't it? Um, all out of pictures. That's okay. So let's just read the markets. And I'm going to go through the process of nothing more than advantages, right? So as if I talk about it, I'm going straight from that picture. The three things that I look for: momentum, clear path, and an entry area. So on the S&P, and then we're going to do it like this. We're going to take that large chart read first. The background is red. So I know that I'm only looking for rules to be met for high probability trend trade short. I'm getting myself in the mindset of never fighting the trend because it's easier this way, right? Well, Andy, you want to talk about locating the WOO, the window of opportunity? Or are you just asking what it means? That was my brother's acronym. We were talking about it one day, and he said WOO, and everybody in the room heard Ric Flair, and it was kind of funny. So because the background is red, I know that I'm only looking for down, right? I'm only looking for shorts. I'm only looking to sell the market because I'm not going to fight the trend. I'm not going to fight what the people with the money are doing. So the first thing I look for is, do I have odds favorable momentum? Do I have smalls below the large or the large wide? Are they angled in the direction of the trend? So I'm going to write on the chart, strong triggers. And then I have to put yes, because they look exactly like the strong triggers look when I go to the manual. They look exactly like the strong triggers looked when we studied it in class, right? There's my odds favorable momentum. And then the next thing is I have to look for the clear path. So I'm doing this order of operations. If then, if I have this, then I'll look for that. So the next thing is anytime I'm looking for a clear path, I'm looking at the most current bar and I'm saying, did it reach an area? Well, it definitely. It reached a couple levels of Fibonacci support. And then I have to ask myself the question, where are my triggers? Are they above the support or have they broken through the support? And in this case, they all remain above support. So do I have no termination conditions? I'm using the language. And the answer is no, I don't. So I'm going to stop looking. And it's really that simple. I never even have to go to the next chart. If rule 1 is met, cool, go to rule number 2. If rule number 2 is not met, my option is to stop looking for a trade. As a brand new high probability trend trade user, it can be that simple. And look at the bounce that's happening, right? It went right beyond that mid-band, right beyond all the triggers. Rule number 2 keeps me safe again. So now I come in and I take a picture of crude oil. And the background is green. So I know I'm only looking for up. And my smalls are breaking above the large. And it's not the best momentum look. But this is the beginning of odds favorable momentum. So it's good. It's good. It's not great, but it is good. It's the beginning of odds favorable momentum. It is the small triggers beginning to accelerate above the large. But then we get right back into that pesky rule number 2. And I'm saying rule 2 is not met. Because price reached Fibonacci resistance and none of my trigger lines broke through. So once again, guys, I'm going to stop the process of looking for a trade. I'm just going to say I don't have a clear path. So I'm going to sit on my hands and do nothing rather than hope the area breaks. And then we'll go one more. I'm in an uptrend, right? My background is green, but my triggers are red. Does everybody remember when we talked about I can't have strong triggers if they don't match the background? I'm done looking for the trade. I don't know who's going to win. Is it going to be the same buyers that created the uptrend, or is it going to be the sellers that push the triggers down? Is support going to stop the market? Is resistance going to stop the market? Guys, I can avoid indecision through some very simple rules. And then once you get to the point where you're comfortable with that, when you start saying to yourself, well, my rules aren't met, Then you start playing the game. Well, what does have to happen for me to take a trade? Well, in order to take a trade short, I need this momentum that's brewing to break 864. I need my trigger lines to get below. I need to at least get a 50-50 look with perfect entry over here to really feel comfortable about taking a trade into this area. Or I need support to hold. I need my triggers to roll, and I need odds favorable momentum with a clear path to start looking for the long. So I know that it's too soon for a short, and it's way too soon for a long, and there's just nothing to do in the moment. And guys, that's hard, right? Support is still holding on the S&P. So what needs to happen? Either my small triggers need to break with odds favorable momentum and get a rules-based entry on the short side, or support has to hold and everything needs to roll, and then I'll look for opportunities to the upside. And guys, I do this every day, all day. What are my charts telling me? Does it fit my rules? If it does, I'm going to take a trade. If it doesn't, I go through the, well, what needs to happen? And I try to avoid making opinions. I try not to say, well, resistance is going to hold, because I don't know if it's going to hold. Or I don't say resistance is definitely going to break because the triggers are up, because I don't know if it's going to break. What I do know without question is that in the moment, I don't have my rules met. And my rules may change over time. But as a high probability trend trader, as a KISS trader, nothing says that I need to be going long here. Does that make sense, everybody? Talk in terms of advantages. What does it mean to you? What does it mean to have odds favorable momentum? What does it mean to have a clear path? And what you'll find is you'll start thinking in terms of advantages. And it makes it a little easier to trade the market. What do you guys want to talk about? I'm going to shut up for a minute. I'm actually going to mute the room. Is going to be one of those weeks, isn't it? Man, thanks, rule number 2. Thank you, rule number 2. 3 divergences. Joel, you're always looking out for me. Thank you for that. 3 divergences, right? And for you, it'd be strong tops and bottoms. Is what you want to talk about, Scott? Cool. We'll talk about both. 3 divergences is pretty simple, I think. 3 divergences in the same price range. I think this one's even better. Just go back to the tops and bottoms. And then Scott, we'll hit good tops and bottoms next. Utilizing those 3 divergences, guys. 2 ways to use it. The first way is to know not to take that next short. The first way to use it is to say, you know what, 3 divergences printed from a low. It might push up further than is manageable. It may push beyond my best entry. It may change the trend completely. But 3 divergences from a low or 3 divergences from a high, Joel, is just a great way to not take the next trade. And that's how you're going to use it initially. It just simply says, don't take the short, don't take the long. And then I think one of the best uses, especially as you start to read the indicators and get to that point where management is more of a focus than entries, is if you do take this entry, that's a call out, not a box. That's it. It's a termination. And if your rules say don't trade into terminations, well, then it's pretty simple, right? Just don't do it. But if you're in the short, Joel, and everything is going down and you get a second divergence and you're like, I'm not worried, rules are met, mid-band's likely to stop. And then it comes down and you get a third divergence, gives you an opportunity to say, whoa, if I weren't in a trade, I definitely wouldn't take a trade. So it gives me an opportunity to manage out of the trade. And I think that's where it really becomes. 3 divergences on the small chart does a lot to eradicate hoping something works. But let me show you one of the challenges. If I have a clear path, don't let one divergence scare you out. If I have a clear path, don't let two divergences scare you out. Wait for that third divergence, right? It'll help a lot. It'll help a lot. And then Scott, good tops and bottoms, right? That precursor for the highest probability trend trade. It's twofold in recognizing them. And the first thing that you have to be able to recognize is just a termination condition. Let me pull up a picture. And I've got what I think simplifies it a little bit. Hopefully it does. Price reaches an area, no triggers through. It's a termination condition. Are you comfortable with that, Scott? That's pretty simple. You know more long trades, right? But it doesn't mean a short trade. So a termination condition from a high or a termination condition from a low, no triggers through, turns into a strong top or bottom when it creates the reversal. When the large go from green to red over here, the smaller below, or when the red go to green and the smaller above. When you get that reversal in the market, now you have a strong top or bottom. So I love the language. Embrace it for the recipe. A termination that creates a full reversal. That's going to be a strong top or bottom. And if you go with the idea, if you never abandon the thought that that price reaches no triggers, it makes it easier, because what happens, price reaches, no triggers, everything reverses, that's a strong top. Price doesn't hit an area, not a strong top. Even though it reverses, it's still not a strong top. Even a little bit of overrun, because price exceeds, the triggers exceed, it's not a strong top. And it's okay, the market can reverse from not a strong top, but the likelihood of that bigger move and less indecision goes up when it is a good top. So if we scroll back, not a good top, and it pushes down and continues to move up. So you can use these ideas a little bit just to help. And sometimes you'll get a good top and the market still goes down, or a good bottom and the market still goes down. But the likelihood of a bigger run goes up exponentially when that termination creates the reversal, when that's solid, because all it is a decision-making point, right? And look at how it happens. The sellers are in control. The sellers are in control. They're breaking areas. They're going through divergence lows, and then they hit their target. Or they hit that line in the sand created by the buyers that said, no matter how much force they come into this with, this is where we're going to push back. And you can use these key areas. And then when it does create the reversal, it just gives you a better shot at that next one. Does that help a little bit? So right now we have a termination, but unless I get a reversal out of it, it's just a termination. And the termination is only good to the next termination condition. So when the market's consolidating like this, it's okay to let it break. It went without you, Jeremy. Let's look at the pre-trade. I know you've got a solid plan, right? So here we have the pivot stop out at support, 3 divergences in the same price range. The triggers roll, Jeremy, great patience. And you had the perfect entry to take advantage of it, and it just went without you, huh? Happens sometimes. And then, Scott, this is one of those ways where you can add on to what you're doing. Notice that that's not a termination, and it still bounces down, and then it reaches the termination. And then Jeremy lets the smaller, faster chart kind of confirm that the termination is good. And then when his triggers start rolling on an additional chart, something that you'll be able to add in a little bit later, he can use this green line to say this was the line in the sand that the buyers put in there that said if the sellers try and push back again, to hell with them. We're going to give them everything that we got. And that's what we call an HVA trade. And sure enough, it missed that HVA line by just a tick or two. And off it goes. And we know exactly where the first trouble spot is. It's that big red line that's been holding for the last hour and a half. And we'll see what happens there. Great questions. Thanks, guys. And the cool thing is we just do this every day, right? We just talk about it every day. Repetition is key. Remember when you were a kid and you'd watch a John Hughes movie, and the first time you saw it, it was okay, and the second time it was amazing, and by the 10th time, all you did was like you could repeat every word because you knew, right? And then Joel, small have gotten above the large. The large are trying to open up. Not really opened up yet. You're in a range, right? Resistance held, resistance held, resistance held. Pivot stop out held, support held. For me, I like Jeremy's attempt close to the edge. Gary, right click, data series. How many days back are you? Man, my S&P is at 30 days. Holy smokes. I've got 3 times the normal information. Let's see what happens if I go down to 10. Let's see if they look a little better. Here we go. Mine was 30 days back for some reason, Gary. I'm not sure why. Let me let it reload and let's see if we look a little similar. That looks a lot better, doesn't it? That's what you guys are looking at. Yeah, Jeremy, yours looks like that. Guys, I change my charts 10 times a day for class. I pull indicators off, I turn them on, I change days, all that sort of stuff. At 30 days, I was getting 3 times the information to build fibs, right? 10 days is pretty good. Gosh, Jeremy, I love everything about yours now. Even more so. Do you ever look at the continuation style, that little momentum style, Jeremy? I know you do. I know that you've got a very definite plan. That happens sometimes when it doesn't get to the HVA. Yeah. I haven't figured out when it's more appropriate to do it at the midband or when it's more appropriate to do it at the HVA. And honestly, I guess wrong 90% of the time. So I always go for the HVA. And I say exactly what you said. If it doesn't make the HVA, it's just not my trade. It's just easier that way. I don't mind losing trades. Losing trades doesn't... Andy, how do you not have the program? Oh, you're getting your computer today, huh? Yeah, 10 days is all you need. Awesome. So next week, after Christmas, we get to really start having some fun. Oh, that's exciting. I love it. I've got an old trading computer. I've actually got Melinda Novak's old trading computer, a Falcon, that I wiped clean the other day. I think I'm going to load it up over the holidays and get off of the laptop and go buy another 32-inch monitor or two and really get mission control going here at the new house now that I'm settled in. I don't need the laptop. Yeah, that's a termination creating a full reversal. Do you see it, Scott? And then Joel's exactly right. That path is clear all the way up to 84. We'll see what happens. Large triggers are not wide. That's the one thing that gets me. Is I'm relying on small chart momentum here. I'm relying on the small triggers. But if you were going to take a shot, if you were going to say this bottom's going to reverse the market and send it into orbit, there's only one line. But notice that the large aren't wide. Does everybody see that? I don't have great momentum on the large chart. I've got flat lifeless triggers, so I'm forfeiting momentum a little bit. And I would have to be embracing a clear path, and I would have to be embracing that line right there at the large triggers that are coming up. And that little circle that I made, if that bottom's going to be good, if it's going to go up, if it's going to fight all those things, multiple divergences pushing down, right? If this is the turning point, I've pretty much pinpointed where that most likely point is. But I don't have momentum behind me. And that's, for me, a little spooky, especially in a market that's been doing this for over an hour. I want a good look. I want some wide triggers. But that's the one, right? We'll see what happens. Support to the tick, divergence off of it, 3 divergences in the same price range. All my triggers rolled. The area's up. So I'm 2 out of 3, right? I'm a clear path and I'm an entry area. But I don't have momentum, and a momentum pushes the market in the direction of the trend. Did you? Did I miss it? Oh, there it is. Thanks, Jose. Sorry about that. So I just start talking in advantages. NASDAQ had a good bottom. Let me see where you got in. You got in at 11:21. At 11:21. At 11:21. What's the only challenge with this one, Jose? Just from an HVA rules standpoint. And I like the trade, don't get me wrong. Pivot stop out at support, weak triggers. The only challenge is your HVA line is buried in large and small that are down, not up. And that's really, Jose, the only challenge that I see. Your smalls are below the large. The large are wide. The smalls are down. Everything says down on your range chart with the exception of that green line. But it's such an outstanding termination here. And there's no strength here, and the smalls are above the large. I love it, Jose. I love it. I think that that's great usage of termination conditions. It fudges the rules a little bit, but it fudges them erring to the side of advantage. Does that make sense? The entry isn't HVA rules based, but with all of this goodness and those smalls above the large here and all this stuff, your 8 range is just kind of catching up. And then when you're thinking, man, that's the spot, I like it, it's good, and then you get that confirmation, that stranded seller yellow reversal bar, that's when using that confirmation makes sense, right, Jose? Beautiful. Comes down with some strength, retests, pivot stop out, triggers can't get through anything. Smalls get above. That's a nice trade, Jose. Very well done. And then Jeremy, termination, full reversal, odds favorable. It's a 50-50 with 1 divergence. Absolute rock star entry. And now we're just looking to see what happens, right? Great entry, Jeremy. Does everyone see how it fits the bill? Termination, full reversal, odds favorable, 50-50, right? Area's not cleared yet, but with all that momentum, look at that entry at 57. You could literally, if you get a reversal bar, be in that 4 to tick, right? Small chart 1-to-1s entry. Nicely done. I don't give the small chart 1-to-1s that much credit. But when they line up with an area, I love them. That's just me personally. I may have to start watching those more because I think you're onto something. You clearly have your poop in a group. I like the midband. The midband's enough for me. And those pink 1-to-1s just give me a little bit of, yeah, all right. That's a good spot, right? Nicely done. And then C-dub. Termination. There's your reversal. And you put the 21-3 triggers on the chart. All right. What are the 21-3 triggers doing for you, C-dub? Nice, Jose. Do big honking green triggers on there help? I'm just curious. Just trying them out. Right on. You guys know it's coming, right? I'm going to show you one of the best pictures on the internet. It's just an opinion. This is not a Nexgen gospel truth, guys. But there's a point, especially when you're new, when you give yourself too much to think about. And I always go back to The Last Samurai, to the too many mind. Nice, Jeremy. I always go back to the too many mind, right? Where he's trying to fight this guy, and the little kid comes up and he goes, hey, mind the sword, mind the people watching, mind the enemy. You're thinking about everything, right? And maybe not focused on the best. And sometimes, and I'm not saying that this is what you're doing, C-Dub, but these don't do anything to help you catch a short, right? These don't do anything in the time frame to help out. And I think for a lot of people, until you're really comfortable with your reads, that much information can be a little distracting, right? Because without them, you have a termination that reverses, that starts to give momentum, that has you looking down, and definitely has you thinking about the short down here where Jeremy and Jose caught it. But this right here says, oh shit, there's that gap theory. I wonder if it's going to pull up to these large triggers, and you find yourself skipping the faster moving trades sometimes. Allegedly. Then Paul, termination, full reversal. You take the momentum style, which is rare for you. I don't see you doing that one much. And then you re-enter at the mid-band at the large triggers and get paid twice. Little double dip in there, Paul. Nice job, man. And then Joel, same one, making it look easy. You and Paul are in cahoots. I'm not sure how I feel about that. And then absolutely beautiful, right? Easy money. Paul gets paid on it. Jose got paid on it. Jeremy got paid on it. If you didn't get paid on it, show me a picture and tell me why you skipped this trade, guys. If you skipped it because of the divergence, that's cool. Sorry, attack dog. That's no worries. It doesn't fit the KISS plan, does it? And that's that progression. That's that, well, I've gotten pretty good at reading my indicators, Mark. And I recognize that when I have a termination that creates a full reversal, that provides me odds favorable momentum, and I've got that 50-50 look. And guys, look at the difference on the triggers. You know when I say smash? How's that for smash? Guys, that is annihilating the area there. So when it finally pulls back, you're getting in almost at the area that you're hoping breaks. And you've got the strongest triggers. And your window of opportunity is a fraction wide. I love this look. And this is a natural progression for people. As you get outside of the KISS plan, and there you go. Joel, the divergence kept you out, right? It's not in your plan. Great job. And guys, if you need to go back and you need to get it simple again, keep going simple, but don't stop taking pictures. Don't stop taking pictures and talking about advantages, because the KISS plan is the most remedial approach to taking these trades. And then, Jose, you said with the 50-50 and divergence, I'll wait for confirmation. And Jose, if you never got that confirmation, it would have kept you out of the trade, right? But when you did get it, it made it easy to take the trade. Nice job. So 3 different ways to take it, right? Or to not take it. We had Jeremy's in at the area, didn't even blink. We had Paul's in at the area, didn't even blink. We have Jose's, wait for confirmation. Love it, didn't hesitate, followed his plan 100%. Out at the trouble spot, 2 divergences, says, yep, I'm done. Pretty outstanding, guys. Nice work. What's cool is it's the same trade. It's the exact same trade, and everybody took it different. How do we feel about termination conditions at 84, ladies and gentlemen? God bless Rule 2. Mike B, how you doing? 1940. We always have the strong, quiet ones in here. C-Dub, you feeling good? Getting closer every day, right, guys? Every day. Get one step closer every day. Just a little bit easier, a little bit better, a little more clarity. Michelle G, nice to see your smiling face in this room. Uh-oh, jury duty. That's all right. Go do your duty. I'll be here next week. I'll be here tomorrow. You know, there's things you can say to get out of the picking process pretty easy. None of it's very nice, though. Guys, we've got about 15 minutes. Is there something you'd like to talk about? Is there a concept that we can address for you? Got a stalker in the room. Do you see that? John Novak peeking in on me. I'll call him on that in just a minute. Cav, I got you 15 hours of live feedback every week. I got you the ability to recognize advantages. He has been. And now my New Year's resolutions, Cav, are going to be to stop breaking the little rules that I break every now and then. People are responsible for their actions. We all do it. We all have a thing, guys. The quicker you recognize your thing, the easier it becomes to be consistent. My thing, and I'll show you what my thing is. My thing is knowing that with these weak triggers and coming down to support, the market's probably going to go up. And sometimes I'll get in a little sooner than I need to. I'll leave that alone. Gonna leave that alone. But everybody tends to lean one way. Sometimes it's getting in a little bit before the reversal happens. Sometimes it's getting out a little later than you should. Sometimes it's saying, well, it's red, so I'm going to trade into a termination condition. Once you identify it, guys, it gets easier. But you won't identify it if you don't make mistakes, if you don't take pictures, if you don't annotate charts. It becomes more difficult to identify on your own, and it's easier if you drop stuff in the room and you say, hey, Mark, take a look, right? Take a look. These are my things. I actually made a Word document for my things, for my safeguards, to help me with it. So we're going to leave with this today, guys. To minimize your learning curve. I still have the giant cursor on from yesterday, thinking that would help. To minimize your learning curve, Cav, they take commissions out. So you'll see on NinjaTrader 8, you'll see where your account is and what your realized is. So they do count for commissions. So to minimize your learning curve, congratulations. Not bad considering you told me you were going to wait till January 1st to even try it. And here you are. Tearing it up. Cav, I got to tell you, and I'm not playing class favorites, you have posted so much in this room in the last month. You have put so much work into getting where you want to be. It doesn't surprise me in the least bit that you just qualified. Doesn't surprise me at all that you did that. So congratulations, man. What a great victory for you. Outstanding. It is nerve-wracking. Wait till your first trade on the funded account. Stick to your plan. Guys, to minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? Guys, you're not expected to know the difference. It would really be kind of tough to know the difference. To be sure, you need feedback from us. We're here to help. If you place a trade on simulator, you participate in class, there's no risk of loss. You need someone to tell you what you did right or wrong when you're new. It's part of the educational magic that Nexgen offers new traders. Guys, and it is magic. You'll be absolutely floored at how rapidly you get to where you want to be if you follow the simple plan. Guys, post your trades in class. Use a spreadsheet. Go study your spreadsheet every morning. Learn the rules. Get good at speaking in terms of advantages. Simulate. You've got to simulate, guys. You got to practice. And you got to practice like you want to play. Don't simulate to get rich. Simulate to be correct. We got 10 minutes. I'll tell a quick story. So I used to road race motorcycles. I used to race. It was fun. It was a great time. I wasn't that great. But I was out in a practice session before an endurance race one day. And it's 600s. And I'm out there and I'm doing about 70%, right? I'm going through and I'm dragging knees and having fun, but I'm not really pushing. Honestly, I'm just going through the motions. I'm not really thinking about what I'm doing. I'm just doing it. And a buddy of mine who eventually would go on to be class champion blew by me. And he blew by me so fast that it was a little spooky because he and I weren't that far off in times. And he blows by me and his knee's on the ground and he looks over his shoulder and he gives me the dude WTF shrug. And I'm like, man, what's up with Bradley? So I go to the pits, we pit, and Bradley comes over to my pits. He's like, dude, what the hell are you doing out there? And I'm like, what do you mean? It's just practice. He goes, yeah, but how are you going to be able to race if you practice other than how you want to race? How are you going to know what to do when the pressure's on? How are you going to know how to react when things are moving twice as fast? He goes, dude, you got to practice like you want to play. And it was very insightful and it made an impact on me. But trading is the exact same way, guys. You've got to treat that simulator like it's live. You got to treat that simulator. You've got to believe in your brain that simulator is the real thing. And then when you go to the real thing, because of the confidence you built on the simulator, it's so much easier to perform. And there's even less pressure to perform because you can do stuff like Apex or Elite or Top Step. You can go through and you can trade other people's money, and you can qualify, and they'll let you trade their money. And there's not like the old days where you have to blow out $10,000 to be successful. All right, so Joel, still 50-50, right? That's a different checklist. Coming from a good top or bottom, I like it. Odds favorable, large trigger, both charts. Not true. Do you see it? David, somebody asked me that once before. I don't know how to bring them forward. I don't. Sometimes they get caught behind. I'm sorry. I know that's not the answer you want. Send Jason a little message. All right, so Joel, we're gonna play the truth in advertising game real quick, and I like it, but let's talk about it. Good top is a yes. Odds favorable is a yes. Termination conditions not true is a no. What kind of trade is this, Joel? Do you see the 50-50? Large triggers haven't broke the 1-to-1s. Large triggers have not broke the divergence low. So each indicator inside of favorable large triggers, I don't know what that means. Does that mean area inside of favorable large triggers? That's probably one of my brother's old ones. So it's the wrong checklist, right? It's not your 50-50 checklist. It's a high probability trend trade checklist. So there's the first challenge. And you already had 2 divergences and weak triggers on a 50-50. That's a great one to avoid. And I know that you typically use a limit order, don't you? So you typically have a limit order waiting right here, which means that you were watching this trade as the rules were breaking. And I know this because I've done it. Oh my gosh, I've done it, Joel, so many times. And you said to yourself, well, shit, my rules aren't met, and it's going to go anyway. I better jump in. Has anyone else ever done that? Literally said to yourself, my rules aren't met, and then you see it start to go, and you go, oh, but I better go. Hey, Ron, have a great afternoon, man. Wife made you breakfast. Have a good one, brother. I know. I've done it, Joel. We've all done it. You've got to do it. That's how we all learn. Good job. Jeremy. Really? 76.9. That's the best you can do, Jeremy? Only $1,700? Why are you posting this garbage in my class? Cav, congratulations. Great job. Jeremy, outstanding work. I've watched you put a tremendous amount of work into your plan too. It's fun. It's fun watching you guys have the effort get rewarded. The most important thing that I think is on this sheet, Jeremy, is that you took $700 worth of losers on the way to $1,700 worth of profit. You don't have to win every trade, guys. Remember that. You don't have to win every trade. You know how to manage them. You know the advantages, guys. This is a pretty realistic run at trading with Nexgen. But the largest winning trade is $120 bigger than the largest losing. So even at 1-to-1 almost, right? 77% winners. Beautiful work. Outstanding. So guys, it's not whether or not the software works. It's not whether or not the methodology is good. It's not whether or not these patterns repeat themselves. It really boils down to, are you willing to put in the work to recognize the moves? Are you willing to put in the work to learn the patterns? And if you are, I'm here for you 100%, guys. I will not quit on you. We'll do it 15 hours every week and get you exactly where you want to be. You will get out of the software what you put into it. If you go through the motions, if you only post winners, you're going to get exactly what you put into it. If you post your losers, if you ask for help, you're going to get what you put into it. Joel, you're doing great. You took a big step back this week and really tried to adhere to your plan. And I would say you did that with about a 90% success rate. So I think you're on an outstanding path. Just keep doing it. Do it again next week, a little bit better. But guys, that's me. That's it for the day. That's all I've got. I hope you guys learned something. I hope you had an aha moment. I hope something got a little easier than it was yesterday. I'm going to post the video for the room. So if it was